Hey, what's going on, everybody?
There we
Uh,
go.
Perfect. Happy Tuesday. Let's get right into it. I wanted to cover a couple things. The first thing I wanted to go over. So I was on my one of two walks that I do every day for my physical therapy, and I was listening to a Mark Douglas um, YouTube thing here, and I kind of just want to play it. I'm not going to play all 53 minutes. There's actually only about a 5 minute segment that I want everybody to. Wait, no sound? Can you guys hear me? You got me?
We
Okay.
can hear you.
All right, perfect. All right. Yeah, somebody said no sound. So, were you? Could you guys hear the music at all before or no?
No, I didn't hear any music.
Oh man, I wonder why it's doing that. All right, no worries, no worries. I heard music. I had it playing. Okay. Well, we'll go from there. So I want to play this because it kind of goes towards mindset, right? And then what I want to do is obviously go over the calendar, and I want to review two trades. I want to review a US 30 trade from last week, and then I want to review. Actually, I want to review a US 30 trade from Sunday Open that I want to go over, and then we'll kind of get into some setups that I'm looking at. All right. It's actually been a really nice start of the week for me, um, which was I just had a little espresso because I got up at 4 o'clock in the morning. I'm apparently dog sitting my oldest daughter's puppy, so he was barking and nobody, six people in the house, and nobody wanted to get up with the dog. So I was up, so I figured I did some trading, and it was pretty nice. So we'll go over some stuff and kind of get into it. But I definitely want to play this here for you guys. Okay. What I do want to play is, and you know what, let me make sure computer sound perfect. Okay. To give you a little preface, right? So this is obviously like a seminar that he's doing. He's talking about he's in the process of writing a third book. Obviously, he wrote The Disciplined Trader and Trading in the Zone was his last book that he read. Both of them phenomenal books. So I want you guys to listen to what he is saying as far as the mindset of a trader. All right. And hopefully that'll shed some light. And if you want, I definitely will copy this link and send it in the chat. So you guys, if you want to, it's three parts. You can actually four parts. You can see the second, third, and fourth here on the right-hand side. I'm only through this first part. I got through it. My walks are normally an hour, so I got through the first one. But I want everyone to kind of just listen to it and just take what you can from it. I'm going to definitely give my spin on it because I know mindset was one of the biggest things that hold on. Okay, mindset was one of the biggest things that I know I had to overcome. But he puts a really good spin on it. All right, so let's listen here.
I'm thinking, well, what's going on here? And nobody asked him to elaborate. So it's like, I'm just hoping this didn't apply to me. Okay? I'm just like, I don't know what he's saying. I don't know why he's saying it. I just hope it isn't me he's talking about. Okay? And it was, of course. It was, it was definitely me, as well as everyone else in the room. So anyway, like I said, I really felt I had to write something from ground zero. In other words, if you don't know anything about this business, if you don't know anything about the nature of trading, and especially if you don't know anything about the nature of price movement, that you can actually go through, understand what you need to go through, and go through a process of changing the way that you think, because this is what this is all about, everybody. You're going to have to get used to the idea that if you're going to do this successfully, you are probably going to have to change some major assumptions, some major beliefs that you have about the nature of market trading to do it successfully. I'm not saying you're not going to have winning trades. I'm saying that if you want to create a consistently rising equity curve and assure yourself of an income, you're going to have to think differently than what you think right now. There's no way around it. Like, for example, most of you in this room, just quick example, most of you in this room would think that because I'm a trader and because I put on trades, I'm a risk taker. Does that make sense? Because we know that trading is risky, right? Come on, I'm going to have to get some feedback, guys, okay? You can't sit there stone-faced. You really can't. Seriously, you can, but it's going to make things hard for me. I don't want it to be hard for me. I want to enjoy myself. Okay? So come on, just give me some feedback. Yes or no?
Yes.
Okay, thank you. Remember, I haven't done this in 3 years, so give me a break. I'm asking you nice. So, yeah, we're risk takers, right? And yet, when you think about it, everything that you do, or let's say I used to do as a trader with respect to analysis, was to try to eliminate the risk. Was to try to make the risk go away. Was to try to make sure that the trade I'm getting into right now, this trade, was going to be a winner. Not maybe a winner, but going to be a winner. Or why would I do it? Why would I get into a trade if I didn't think it was going to win? Does that make sense to everybody? Is that the kind of logic that makes sense? That's exactly the kind of logic that's going to make sure you're not going to be successful in this business. It's exactly the kind of logic that is going to assure you that you will not make it in this business. This business has nothing to do with winning on a trade-by-trade basis. On a trade-by-trade basis. What you're going to learn today is that your technical systems, okay, what they give you is an edge. Everyone, you heard the word probability said 100 times. Probabilities, edges. Edge is nothing more than a higher probability of one thing happening over another. There's a huge difference between understanding that concept and actually believing it in a way that you can execute your trades properly. You actually have to believe in the nature of probabilities at the very core of your trading personality. Which means you're going to have to give up on the idea that each individual trade is going to be successful. What your system does is give you an edge over a series of trades, where the outcome of each individual trade is unknown and unknowable. Not just unknown, unknowable. The more you think you got to know in this business, the less successful you're going to be. This isn't a business about knowing what's going to happen next. It's a business of getting your mind to the point where you're completely detached from your outcomes. Very different than the way we live our lives. Gino, I was talking to Gino last night. Gino's been an attorney for how many years? 43 years. What did you learn when you became a trader in relationship to the kind of strategies that you used as a trader?
Everything I use in law absolutely is completely the opposite in trade.
Did you hear what he said? Everything he used to be a successful lawyer is completely opposite of the strategies and the thinking methodologies that we have to use to be traders. If I'm a lawyer, am I detached from my outcome?
Oh, yeah.
You are? Yeah. If I'm a lawyer, am I detached from my outcome? Oh, no. If I'm a lawyer, am I detached from my outcome? Absolutely not. I'm going to make sure that I get the outcome I want. If I'm a doctor, am I detached from my outcome? If I'm an engineer, am I detached from my outcome? So if I'm saying to you to be successful in this business, you're going to have to become detached from your outcomes. Just how in the world are you going to get to the point where you can do that? You don't know. You're right. You probably don't. Thank you. Trade for somebody else. Not everybody. You know, there are the groups falling. There are people that can trade for somebody else and be detached, and trade for somebody else, and actually they're even more attached than what they would be normally. I work with both ways. There are people who can actually trade their own money once they learn the right methodology and the right mindset. They can trade their own money much easier than they can trade somebody else's, because they're more concerned about losing money for other people. Somebody you don't know. Yeah, it's still there's a lot of variables in there. Yeah, that's So basically, I had to write this book from, like I said, from the perspective of going from the ground up, and having 2 books under my belt, which I thought were really tough books to write. I mean, they were very, very difficult books for me to write, and I'm thinking, and this is my own bias that I'm going into this whole project with. Like, okay, I wrote the Discipline. A Trader took me 8 years. I wrote Trading in the Zone, took me 5 years. Come on, I should be able to knock this out in a couple of years, right?
All right, we'll pause it right there. So you guys can continue, but I wanted to get through, because when I was listening to it on my walk today, it really kind of hit right on the head what I guess learned as far as mindset from my personal journey in trading, right? You have to disassociate yourself from trading, okay? You've heard me say it probably, I don't know, 100 times if you've been trading with me for a while, where I would say, I'm going to put my order in if boring, yeah. If I'm going to put my order in, and if it hits my stop loss, it hits my stop loss. I don't care. I was talking to somebody earlier, and we actually, I think it was last week, somebody hit me up. I don't know if it was a Euro USD trade or something, but I took two losses on it. It kept going up and up and up, and I just kept selling, selling, selling from the points of interest that I wanted to sell from. And then finally, on the third time, it hit, and I ended up making, I think it was like a 16-to-1 ROI on it. Yep, there you go, Juan. I think it was you. Yeah, you're right. Um, and just like I told you, I have no, and I know it's hard to say don't have emotions in trading. Don't, honestly, I think it came very easy to me just because of my prior experiences in my life. But yeah, for me, it's just pull the trigger. I'm going to sell, 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 and you could see what happened. On the third time, we finally got a trade that hit. So I lost, 2%, no big deal. And, I profited.
Can't,
I want to say it was like a 14-to-1 or something like that. So
hey, Mike, we can't see your screen.
no.
We're still on the YouTube page.
Yeah, that's where I'm at. YouTube page. Yeah. My bad. Sorry. No worries. We'll close it out. Hold on. Yeah. There we go.
Oh no, that's my fault, man. I thought you were showing the chart. My bad.
No. Yeah. I was just talking. I'm just talking about it. So I can't stress enough. It sucks that Mark Douglas didn't get to write his third book, because I definitely would be reading or listening to it. But I definitely encourage everyone, all of your struggles, it's all mindset, right? We all have the pretty much the same um, trading strategies. We all have the same training. Some of us dig a little deeper into it, but for the most part, it's relatively in line with everybody. So there's 15 people on this call. We're all doing pretty much the same setups. How come some people are winning? How come some people are losing? And it's all in that mindset, right? It's all in that mindset. That's one of the things that I've really, really dedicated the last probably 4 months, 5 months, especially since I've, I had my back surgery and all that, and I kind of had no choice but to listen to audiobooks and stuff like that. I've really dedicated a lot of time to it. And when I was walking today and I heard the entire thing was actually pretty good, but it's extremely long. So I definitely encourage you guys to do that. You were an ECAT and closed. Yep. Yeah. I held, actually I closed right before market close. So we'll go over ECAT. ECAT was nice. We'll get another setup though. But let's get into it. All right. I definitely let's go over the calendar. I want to go over two charts in particular, two different kinds of trading strategies that I want to look at and show you guys on what I saw and how I saw it, and then kind of give you some mindset on it, and give some just some pointers on it. All right. I'll be honest, I am pretty much 99.9% sure that I'm done trading for the week. I had a huge week on 4 Dow 30 trades that I took to 4 positions. I am going to trade my Forex account just because I have a split account. But even that, I made, I think it was like 18.5% between yesterday and today. So, but we'll take a look at it. I want to definitely get into some stuff here. Going into the calendar, everyone should know that Friday is a bank holiday for most everybody. So that means that NFP is Thursday, right? So again, part of the reason why I'm almost positive that I'm done trading for the week. All right. We do have going into tomorrow, we do have, just the non-farm payroll change, which really doesn't give a huge significant move. Other than that, there's nothing, right? There's nothing until Thursday. So you can pretty much rest assured that Wednesday, we're just going to see the markets going sideways. All right. If there's any opportunities for tonight, I definitely would potentially look at taking them. But I would definitely try to secure some partial profits, and ultimately be out of the market if you're not in a really nice position, going into Thursday morning. Cause you can, especially for everyone on this call has been trading for a while. Going into NFP, the markets for the 12 hours preceding it, are just stagnant. And they're just waiting on that data to decide where they want to go. Okay. The following week, we definitely have some volatility on the Australian and New Zealand pairs, but, for the most part, it's pretty dead. Bear with me here. My entire family just came home with 4 dogs barking. Hold on. All right. So that's the calendar. This is what I want to do. I want to get into this, right? So the first thing I want to show is, let me pull this bad boy up. All right. So last week, we had US 30, right? We had US 30, and I'll show this part first, okay? Let me pull this up here, right? So this is Wyckoff, right? And if you guys are definitely interested in Wyckoff, I'll be honest, I was not a big Wyckoff person. It actually was Victor on our team that told me that, I don't have all the nomenclature down, but I pretty much trade all Wyckoff because I look for a spring and then I trade off the spring. And then I just started to see Wyckoff in accumulation, right? Or distribution. Those are the only two events that you'll see in a Wyckoff schematic. But ultimately, this is what I was seeing on US 30, right? And you can see it. I compared it in that chart that I sent when in the Telegram. But we had a very, very nice. We had just come out of a distribution phase, right? And you can see that we had a preliminary support area. We had our selling climax, right, where ultimately price found a support area and then pulled back. This was the automatic rally where you can see price pulling back. We had a secondary test of that area. Okay, we consolidated, created a lot of liquidity up here, and I broke down the phases, right? So in phase B, what I was looking for was to see that support area, and you could see the support area right here. And then we had that drive on liquidity, right? We had that spring, right? Where what captures all of the liquidity from buyers that were in this area and in this area. All right. And then ultimately what you wanted to do was buy the test. Okay. I was actually trying to get a really nice test here. I didn't get the entry here, but I did get the entry off this candle here. All right. It came down off a 1-minute chart, nice buy. And then ultimately I had said that, from here, I was going to get another entry off of here and we were just going to rally up. That is what happened. And you can see on the line chart, it's actually even cleaner than that. It's relatively, just looking at it, relatively pretty accurate to an accumulation schematic. Once you see that, your entries are in phase C and then phase D, right? These are where your entries are. Once you get up into this range here, the accumulation phase is gone, right? Once you've taken the sign, this is a signs of strength, okay? After the test, you get that sign of strength that it wants to go up. LPS is your last point of support. And that's where you can get a second entry, which is where I did. And then this is your buy up and last point of support, right? This is it's gone. And ultimately, that's what it did. I definitely wanted to share it because this was even though this probably took an entire 24-hour period, but it was in phase C and phase D where it was just very easy to catch your entries. And I mean, off of this area here at 25,200, taking it up to 25,600, we're talking 400 points with a very, very small, tight stop. Ultimately my stop was just below this green line, going for this entry. And then off of this 1 minute, I want to say it was like a 15-point stop loss. How do you handle this setup if the spring creates an equal low? So if the spring, you mean down here, creates an equal low, well, then it wouldn't be a spring, right? So for this to be the spring, it needs to grab liquidity. So it needs to be a run on stops. Does that make sense, Mike?
Yeah, can you hear me?
Mm-hmm.
Okay, so let's say it does that, what you're saying, and that makes sense, but it has the same result where it breaks the high. Like you see how you have it right here?
Uh-huh.
It breaks the high and it comes back down, but to the left, there's an equal low with the spring. You understand what I mean?
Down here?
Okay, let me see if I can show you something. So for example, can you pull up USD CHF real quick?
Yeah.
On the 45-minute?
Yep. Hold on.
Or on the 1 hour is fine.
Give me 1 sec. I got an order on it. So, okay. So 1 hour
Yeah, 1 hour. Okay, so you see how there's equal lows right there?
right here. Yes.
Yeah. Now, if you look at 94600
94600 right here.
right
Yes.
there, you see that little candle to the left?
Right here.
So yeah, this is just an example.
Yep.
If you were to take it, like you wouldn't take that trade because there's equal lows below.
Well, this isn't accumulation. Okay. And the reason it's not accumulation now, well, I'll take it back. I take it back. Right. So we do have a potential accumulation schematic, right? But we need to grab
Right.
below here. Okay. This
Okay.
here is not accumulation.
Okay, that's okay.
You know what I mean? If
Yeah.
if this area here hadn't happened, then I could potentially see it, right? If say here this was your your preliminary support,
Mhm.
you get the drop, you get your selling climax, and then your automatic rally. But because we created this, this to me isn't accumulation yet.
Okay.
But if that answers your question. So if and I'll tell you this. So if we were just looking at this area here, right? This is where I bought this morning, right? I bought, what time is this at? This was at 6 a.m. So I bought off of this 1 hour candle and my stop loss was just below here, right? So this is what I bought and I took it up to the highs.
That was yesterday, right?
This morning, right? This morning.
No, I think it was yesterday.
Monday morning. Yeah, Monday
Yeah, because
morning.
I took the same trade and I
Yeah,
closed out. Yeah.
Yep. This was Monday morning. So what do I, and I'll go over it, but what needs to happen for me to get into the buy again? I want to get a reaction off of this candle. I want to sweep these lows, right? I want to sweep the lows, and then I want to get into this candle here. And there's a couple time frames on here that we can get into. And then obviously if this gets taken, obviously we know that we're going into here, right? So that's what I'm looking at. But yeah, so this right here is an accumulation. This is USD CHF being USD CHF.
Yeah. I have pretty much the same exact setup below, but then I was kind of confused today, and I was like, would this be, a decent entry point since it broke structure? But then I didn't take it because I was like, I'm not taking it. I'm not sure.
Yeah, no. I bought it here yesterday. I sold it here off that harmonic I sent out, and then I'm waiting to buy it down in here or in here. I'm gonna wait. And I'll go over it, but I'm personally gonna wait till New York Open tomorrow to see where we're at. All right.
Cool.
So anyway, going back, so that's what I was looking at for this accumulation. Again, a very easy. It was one of those I had really never caught or was able to see an accumulation without somebody else telling me about it, and it was great. I was like, oh, perfect. I marked it up. I was like, yeah, this is it. Bam, we got it, on the 15-minute time frame. So that was that. And let's now go into the other setup. And when I sent this out, I think I sent it out Friday or Saturday. And this is what I was looking. I was in a sell on US 30 over the weekend. Okay, so on Friday, I sent out this chart and I had said that US 30, right? And here's a zoomed in view of it, right? This was back 2.5 weeks ago, right? You could see the clear equal lows. Okay, you could see the run on liquidity, the FU candle, and then we pulled away and we had a lot of inefficiency in here. And I was looking at either the 5-minute or the 1-minute open as areas of buying, some point of interest that I was looking to buy off of, right? So 24,882 is what I was looking for on US 30. And what I sent out, I'd mentioned to everybody not to buy on Friday. We were going to sell off. I just want to pull it up because this was, I had sent out, and let me go to bar charts, right? Hold on. Has anyone ever used bar charts? I know I referenced it on Saturday when I sent it out, and I know I've talked about it before, but it kind of, when I was doing some studying, let me pull up this and this. Yeah. Okay. So, okay, let's go to what do I want? I want the Dow. And the S&P was pretty much the same move. So I want to show you guys this, right? So on the Dow, we'll just go to current contract. And one of the things I've been looking at, is identifying when open interest or smart money gets into a trade setup, right? So what I look for, I just stay on the small time frame here, the daily time frame. And again, when I posted this, let's bring it up. Okay. This purple line, all it is, I don't even have volume on there. It's just open interest, right? Just open interest. So what I posted over the weekend when I was doing my studying was, you can see on this candle on June 18th, right? On June 18th is when open interest or smart money made a move, right? And what this indicates is that in order volume, right? A lot of orders were closed out. Okay, a lot of orders were closed out. You can see it went from 93,000 to essentially to 70,000, right? All in one day. Okay, so what does that mean? As far as open interest, well, that means that institutional money closed out of buy positions, right? Well, why would they close out of buy positions? Okay, why? And that's when I started to look back, right? Here's the S&P. Let's go to the Dow. Here's the Dow, right? On June 18th, right? What happened on June 18th? And you can see I boxed it in, all right? Well, if smart money here closed out of their positions, you still saw the market go up, right? You still saw the market go up. So what was their agenda? What were they looking to do, right? And here it is, right? You could see the clear equal lows, the support level. Everyone that was here going long, right, just got all of their orders taken. I think Gold Cup called a sell on this breakout. What happened? Everyone that was selling the breakout got taken. So what needed to happen? Well, smart money, whatever institution created this FU candle, needed to close out of this sell order, right? This was a sell to buy move. All right. So when I sent this out, this is what I was looking at, right? You could see we had clear liquidity sitting here. We had the FU candle. We had price move away, and you could clearly see I said, I'm looking for evidence that the institutional order flow is going to pick up after closing out of this position, right? And what was I looking at? I was looking around 24,882 is what I was looking at. Okay. So I just want to see if I still have let's go to equities. I think I marked it up on YM. Yep, here it is. It's still marked up. Okay. So what I wanted to see, right? What I wanted to see in this area, again, was I wanted to see some evidence. So I'll be honest, me personally, right? Oh, I can't do it on the futures. Me personally, I did have an order set at the 1 minute mark. And the whole reason I did it was because of the ROI, right? The return on investment. So I was willing to give up 1% of that account, okay, for the opportunity to make that money and then some. All right. What I was looking at was this candle in here. All right. And it's a little different on the futures side, but you can see that green line is where I had my order set. Okay. That green line. I wanted to see price close out, and obviously the stop loss was right below that candle. Okay. That's what I was looking to get at. And the whole reason that I did that, right, and this is just something that I've been studying, that I've been following, is when you go here, you can see that open interest, right? We had smart money close out of a ton of their positions, all right? Well, why do they sell out of their buy positions? Well, because they're getting ready to go short because they need to close out of some positions down below. And it just made sense, right? It made sense for me to go into this area here, all right? Wait, wrong candle. I went to the wrong candle. All right, hold on. Let me go on my chart. It's easier because I can't go into replay mode. Here we go. Okay, here we go. All right, so this is what I marked up. Let's go to a 15-minute time frame. Okay, so here's your sell to buy candle, right? And this is how I sent it out. So we had liquidity, the FU candle, right? This is your sell to buy. So what we need to get into is what is in here, right? What evidence can we find that price was manipulated in here? And it's clearly right here on this 1 minute time frame, right? This 1 minute candle, this 1 minute candle is what I wanted to see us mitigate out of. You can see clearly, right? You could see the displacement in here. Now I did have a 5 minute candle that you could have taken, right? And the 5 minute candle would have been right off of here, this top. But I was definitely more interested in this 1 minute, especially just doing it blind, right? Just putting an order in and crossing my fingers and saying, all right, I hope this works. And it just turned out, a fantastic trade, right? So does everyone, I guess, does everyone understand what I mean by the sell to buy, right? Does everyone understand what I mean by this is where they had to close out of their sell position? And this is why I was looking to take it off of this entry. And then ultimately you can see, fast forward to Sunday open, we gap down, right? And I remember sending out, because obviously Forex opened at 5 Eastern. I did send out that all the Japanese yen crosses gap down, right? So if you understand the risk off sentiment between anti-per diems and then the risk on between safe havens and the yen. So if all the yen crosses gap down, I pretty much said that all the indices were going to gap down, because that's exactly how they correlate. Okay. And then you don't get, well, we're on the 15-minute time frame, but you could see that was a perfect entry. My stop loss was 42 pips or 42 points. And then ultimately I held all the way to today. Okay. I did take on some more positions after this 15-minute break of structure, right? You can see here's your main 15-minute break, 15-minute structure point. Once we broke that, right? Once we broke that, I took another entry right here, which is a pretty easy setup. It was right off of this 15-minute candle is where I took it. Oh. Yeah, right here off this 15-minute candle. Okay, that's where I took my second entry, right in here. And then I took another entry somewhere up in here. But this was a phenomenal trade. It was almost, I closed out at these equal highs, but it was something like 900 points.
Mike?
Yep.
Did you take that second entry off of that second white candle after that 15-minute candle, or way over to
this one right here? I took it off this one.
Already been mitigated. So what made you put that position in there?
I'll show you right here. Hold on. It was off the 5-minute. Give me a second. So I was looking, here's your breakup structure, right? I was looking to either catch an entry here, right here, or off this 5-minute is where I took it. This 5-minute candle, and stops were just below this low, right? So my two entries, this is where I was willing to put some risk on, right? Because we did have a break of structure, right? And that's one of the things I wanted to make sure. If I'm ever going to trade, right? If I'm ever going to trade off of, say, the 15-minute, I need a 15-minute break of structure. If we're going to trade off the 5-minute, I need a 5-minute break of structure, right? Like I'm not going to say, all right, I'm going to go off of a 1-hour candle, but we've only got a 5-minute break of structure, all right? But ultimately, you obviously you can see the 5-minute break of structure. So my first order where I was going to take some risk was off this 5-minute right here. Stops just below this low, okay? And then if I got stopped out on this, right, I was going to take it off of this 5-minute And the reason, and this is just something that, you know, it's entirely up to you how you want to trade it, right? But I didn't want to have to put my stop loss below here, right? You can see I'm risking 44 points here, right? If I would have done this, I'm risking 85, okay? So I would rather, right? I would rather risk 44, take a 1% loss, and then be able to, because you know, if it takes this out, it's coming to here, right? So I would rather take a 1% loss and then catch a 24-point stop loss entry off of this, and then take it up. This would actually double my ROI, if that makes sense. All right. So that's how I took that entry. I took it off of this last down candle off the 5-minute. If I got stopped out, I was coming right to this one here.
Okay.
So if
Yeah,
that, you know,
you're actually risking less with the 2 separate trades than you would if you
yes,
had full first trade and
right.
it went stop
Yeah, yeah.
loss.
Like I said, I mean, just think about it. So if I put 1% risk on this trade with the stop loss here, right? And let's just say I go back up to the highs. Let's just, you know, just say right up to these highs. Okay. This is only a you know, less than a 2.5 to 1, right? Where this one here, right? This one here is an 11 to 1. Okay. But now if I come here and do this, right? This is a 4 to 1. All right. It's still pretty decent. But if I take a 1% loss and I take this, guess what? I still made 10%. It would still be more percentage gain than if I took a larger stop loss.
Yep.
All right. And that's just something that, like I said, I've been trading like this for a couple of months where I'm okay taking the loss. I'm okay taking, you know, this, you know, if I can get to where I almost force price to pin, you know, at this point, I'm daring the broker. I'm daring the market movers. Go ahead and stop me out, because you know what? I'm just going to slam you with this one here and I'm going to make more money. So I'll give you this, you know, this will be the little sacrificial lamb. And then I'm just going to slam you down the throat with this, you know? And obviously they didn't do that, you know? So maybe we do have spies in our freaking, in our Telegram, you know, but that's how I took it off of here, you know? And then the rest of it is just, you know, I mean, here was an entry I took off of this 5-minute. I think this was at today, right? Is it tonight? No, this was yesterday. So I took an entry here, off of this 5-minute. Again, you know, my stop loss was pretty tight. It was just below these lows right here. It was like 40 points. And, you know, my bias all week and even into last week, you know, I had been saying from the get-go that we were going to take liquidity from these highs right here, right? I mean, if I was a betting man, I would have put the house that we were going to take these highs right here. And you can see what happened today, right? You could see what happened today. We slammed it up. I was looking to take some entries here, but price just never came back down. So I was only able to snag it off of this entry here. You know, but yeah, we took these highs. It was beautiful. Same thing happened on S&P. You know,
Hey, Mike, sorry to cut you
yeah,
off
go ahead.
on the US 30 one. If they blew that second stop, were you going for that third one?
Second stop. Which one?
Like if you blew it, the
On the 5-minute?
Yeah.
So hold on. If on the breakup structure.
Yeah, so there's break of structure. You have the first one that was like 40, and then
So
the second one that was 24, and then there's one that doesn't look like it got taken. Yeah.
this one here, this would be my last one, obviously, because if we break below
And
here,
it's
then,
break of structure.
yeah, and then I'm done, right? So, and again, part of the reason why I dropped my risk to 1% is, like I said, my trading plan allows me to take 6% risk on a day, right? So if I lose 6%, if I lose all my trades and lose 6%, I'm done for the day. Well, I noticed when I first started trading like this, like I'd be done and I'd see other moves and I couldn't take them because I was at my like 6%. But going to 1%, I was able to catch more moves, right? So if I lost 1, 2, 3, and I went to the fourth one, I'd still be okay because this is only you know, my only 4% risk that I'm putting on, you know. But realistically, if this one would have taken, right, let's just say I take it off the open, you know, stops are right here. It's a 30-point stop, taking it right back up to the highs. You know, I'm looking at again a 9.5 to 1.
Right.
So 9.5% I'm making.
All right, cool. I just didn't know if you were gonna, because that one's technically still open now.
Yep, it is. Now I'll tell you this much.
Not that you
So
can come to it. I'm just saying that. So
yeah. I mean, you just have to kind of see, you know, is there a bias for it, right? My when I saw this, right, the equal highs, or I'm sorry, the equal lows here, I had figured, especially when I caught, and I think this is the one that actually I caught in. No, I'm sorry, this one here is the one I caught on the entry. I was expecting, and I still had this order sitting here. I never deleted it because I'm like, oh, look, we got triple bottoms. This happened during, Asian into London. I was like, we might just fart around here, and then, either that 5 a.m. or that 9:30 a.m. move, we're going to get the drop.
Right.
But it never came back. So it is what it is. But yeah, honestly, I can't stress enough how I'm okay having tight stops. Someone messaged me the other day and was like, I just can't trade like that. I can't trade the tight stops. And I explained to him, I said, it's a numbers game. I don't care about percentages, like as far as wins and losses. Heck, I'm okay with winning only 20% of my trades. If I'm risking 1%, in say in a 100% game, I'm okay giving up 80% if every trade I catch is a 10-1, because that means I give up 80 and I made 200. So for me, it's a numbers game. Here, Bonnie, hold on, let me read this. So Bonnie's question, I guess everyone can read it, but is just determining if the market's going to go up or down, right? If it's going to go up or down. So and this is one thing, it's Armando does a really great job of a lot of back testing, right? If you notice when he's like quiet and he's not in the charts, he's like working on a lot of stuff. Like there's a lot of trading, studying that goes on in the background. I do a lot. I'll tell you right now, I probably spend 80% of my time just looking at charts and understanding why did price react the way it did. Let me give you an idea here, right, Bonnie? So let me find the 9:30 candle, right? I've actually, honestly, I only really like to trade now US 30 or the indices. Yeah, it is, and the way I trade, Larry, it's very, I want to see a reaction. If I don't see the reaction, I'm done, So let me give you this idea, right? So this is the 9:30 candle, right? Let's go to a 5-minute. All right, this was, okay, here it is, 9:30 candle. All right. So one of the things I like to look at, and maybe this will give you guys an idea, is typically whatever happens at market open, right? The manipulation that happens at market open is the opposite of where we're going to go, right? So obviously in this current trend, I was looking for buys, right? We had just come off of a key area where we reacted beautifully off of a sell to buy candle from back a couple weeks ago, right? And we had the targets, right? We had our targets. What is the agenda, right? And again, my and I've said it a bunch of times, but the first thing I look at is where is the money, right? So prior to today, right? Where was the money, right? All the money is sitting here and sitting here, right? Where is that liquidity, right? Where, okay, perfect. Let's see, hold on. That resonated with me. He said, impatient with the he said, be impatient with the bad trade, impatient with the good one. That's like what you said he wants to do. Yep, no worries, no worries. Absolutely. Absolutely. Like I want to see a quick reaction, because if there's not that quick reaction, that means that, smart money has not gotten into the trade. And at that point, it's a retail trader's game, and I don't want to trade a retail trader's game, right? I want to trade the smart money, because if the retail traders are moving are moving price, you better believe that smart money is going to take them out of the market. So sometimes you see it on both sides, right? Well, I mean, I would say this, right? I would, I guess my input would be, when we were looking at US 30 this week, right? my targets all week have been these equal highs, right? And the reason behind that is because that's clearly the only equal highs that need to get taken out, right? We don't have anything. If you look at like the 1 hour, right? We don't have anything here, right? We reacted very nicely off of here, right? Um, we did have some, obviously some very good downtrending market, all right? And now we've just broken structure, okay? We've just broken structure on the 1 hour time frame. But all week, these were clear to see, what was happening here. Sellers were coming in the market, right? Oh, look, we have a resistance. Oh, look, we have a double top, an M formation. Oh, look at that. We have a triple top. Oh, we're going to be great. And that's great for the intraday trader, right? The trader that is just selling from here to here, right? That's great for those traders. But the traders that are, and you have to understand who is actually trading this, right? So you have guys that have their bachelor's and masters, an MBA in like accounting, financing, whatever it is. I know because I was actually looking at trying to get an MBA and I decided against it. But you have people that are working for hedge funds, people that are working for money managers, right? Investment firms that are sitting here trading people's money. And they're like, all right, look, we have a triple top. We're going to sell here. They're not closing their position when it gets down to here, right? They're not. They're holding it long term because they're not day trading it, they're investment trading it. So what happens now? Smart money comes in, closes out, and this candle right here just took every one of those traders out of the market, right? It just grabbed those orders. It grabbed that liquidity. So now smart money can do whatever it wants, because it has those orders that are freed up in the I guess if you want to call it like in the order books, right? So that was the bias, right? My bias was going up, and now it's just a matter of what do I want to do to get up there, right? This morning I was actually I had some really horrible reception, so I couldn't get on like bounce back or anything. So I was talking to Andrew, and he had messaged me what bounce back the trade house guys were looking at. They were looking at a sell from here. And I told him, I go, my 2 cents is I'm not selling from from here. I would want the equal highs to get taken before I sell. I'm strictly just looking for buys. I caught a buy here off the 1 minute that took it up. But it's, and Bonnie, I guess one of the key things I can take you, give you some, what's that? Okay. So you have the money symbol top and bottom right there. I have the money symbol top and bottom. Where? Right here? Yep. Yeah.
So you haven't closed out the money symbols that got taken.
Yeah. No, I haven't. But here, perfect example, right? So this was my entry, Bonnie, right? Let's look at it. So this is the 1 minute, right? This happened at just before 10 a.m., right? So you can see, right? What do we have here? We have, and this was just kind of like where I was looking at enter, but right? What do we have? We have support, right? We have 1, 2, 3, 4. We have a lot of liquidity sitting here, all right? What happens? The market takes off and then slams right back down. So my area of interest was this 1 minute candle right here, right? That's where I wanted to take my entry. My stop loss was just below the wick, right? This is the liquidity grab, right? This is where I'm looking. This is where I want price to come back to take it up, all right? I had to wait for a while. Oh yeah, it never did. That's what happened. It never did. I had an order sitting there and you could see it never did. What it did do was I think go off the 15 minute. Let me just check the 5. Yeah, it was the 5 minute. So 5 minute, right? This is the 5 minute. And that's where price came into, right? Right in there. You just look, no, I don't look at the 1 minute. What I do is I look, so when I'm looking at where I want price to react off of, right? So just look at this 5 minute, right? Here, we're going to replay mode and I'll kind of walk you through how we do this. So we have support, boom, big wick, right? Big wick in here. Says, it gives you that proof that within this 5 minute candle, price shot down, and then money came in to take it up. So in here is a sell to buy order in this wick, right? This candle right here is where I need this is a point of interest. This is where I need to investigate. All right, what am I looking for, right? What am I looking for? So let me go to the 3 minute, right? There it is, right? Nice bearish engulfing, but I want to get into this candle, right? Into this wick. I could delete this line. I want to get into this wick right here. All right. Let me go to the 2 minute. Let's see. All right. We're getting there, right? That looks nice. But I want to get into the 1 minute. And that's where I wanted to, right? I wanted price to come in here, right? You can see that price really, I mean, there was no imbalance, right? But we really didn't get that mitigation of this candle, right? Instead, right? Instead, it came down. Well, I guess I'm in replay mode, but instead, we did have some pretty even price action that just came up on the 1 minute. You know, sometimes I don't get the trade that I want. You know, I'll tell you right now, I didn't take it off the 5 minute. I mean, we're talking 55 points, right? I ended up getting in just a little after that, but this was 55 points. I mean, it's doable, especially, you know, what I was looking to gain out of it, right? I was looking to take it up to the highs. So for me, it's got to be worth it, right? So if this was the entry and the stop loss was 55 points, right? My targets were these highs. So, I mean, that's still almost a 5 to 1. It's well within my, you know, my grasp. But that's how I look at it, you know? No, yeah. So Pete, I don't look just at the 1 minute. You know, I've taken them off the 15. I've taken them off, you know, for me, it all has to line up, right? If I have to risk 185 points off of a 1 hour candle, you know, but my take profit is only going to be 150 points, then I can't take it off the 1 hour candle, even if that's the candle that it mitigates off of, right? I just can't do it. For me, I need to be able to crunch the numbers, you know? So, you know, like this 1 hour candle right here, right? Let's just say I wanted to take it off this 1 hour candle, right? Here, I can delete all this because this didn't happen. Say I want to take it off of this 1 hour candle. Right? I'll tell you right now, that's going to be doable, right? That's going to be doable because we're talking 60, I mean, what are we talking? 62 points, right? So I could take it off that 1 hour candle. It lines up with what I'm looking for, all right? And what are my targets? My targets are going to be these equal highs right up here. So this is a 4 to 1, right? A 4 to 1. So I would have been taken in the trade right there, right? I would have been taken in the trade right there. And that's exactly what you want to see. I want candle to come in and I want us to move away. And, you know, realistically within 3 hours, take profit hit. Okay. You know, that candle would have been a good play. I personally came in, I think it was like a 10-minute candle that I got in. I was able to crunch it just a little more. I went with like a 30, it was like a 33 pip, or 33 point stop loss is what I did. That's actually the one I went. The 10-minute candle, this is the 10-minute candle that I went off of right here. That's the trade I took, right? And the entry was right here just after 1 o'clock. And then we hit take profit. Okay. You know, so hopefully that kind of gives you a little insight, right? I mean, for me, it's just not about taking the trade. Is the trade worth me taking, right? Like I said, if I'm sitting there on a 1-to-1, I'm not going to take the trade. All right. On a 1-to-2. So me personally, I need at least a 3-to-1 to even contemplate putting some risk on this. Okay. But I wanted to go over US 30 with it. I thought it was a phenomenal setup. Like I said, equal highs. Now I still am, let me get out of replay mode. I still am looking to see what we do off of this candle right here, right? I marked 50% of this candle. Hold on. 50%, the H1. Come on. There we go. I see. Okay. So I still want to see how we react off here, because if you look at it, right, this was that last push up before the melt. So we potentially could, I guess I can close my buy. We could, oh, you know what? Hold on. No, I'm just going to put an alert here so that when we get up there, I want to see. So
I sorry to cut you off, but when you say looking for a reaction here, are you actually are you saying, oh, I'm just putting an order there? Or are you actually waiting to see what happens?
yeah, I'm not going to put an order in, and this is why I'm not going to put an order in, right? So I'm looking to see what we do up here, but the reason I'm not going to put an order in here is because of S&P, right? The S&P, and again, I'm not a fortune teller, okay? I can't tell, I can't see the future, but if I was a betting man, I would say that the S&P within probably the next 2 weeks gets to 3160. I'm just grasping at straws here, right? But these here are too obvious, right? This is too obvious. You know, think about what you would have done 6 months ago as a trader, right? What would you have done if price got into this area right here, right? You probably would have sold, because I know I would have been selling, right? I'd be like, oh man, look, we're getting into another area of resistance. So that's kind of why I'm a little now. S&P, we have it right here, you know. Could you take a trade off of it? Absolutely. You know, I mean, just look at what it did already, right? We have, look at the 50%, right? Look what happened. So if you had an order in there, right? Let's just say if you had an order in there, now again, I didn't, you would be risking 6.5 points, and you'd be at, you know, a 2-to-1 ROI already. All right. Do I think this is going to pull back some more? Absolutely. I mean, just look at the inefficiency here. We need to pull back at least into here. So realistically, you could have taken this trade and made 4%, you know. Now, what do I see on S&P right now? Well, I see that this candle's been mitigated out of, right? So what does that translate to? Well, it means that they can take it higher, right? It's been mitigated out of. This is a nice, I mean, this right here is a good reaction, you know? I mean, think about it. That's 15 points that it pulled back off of. It's just convenient that it went exactly to 50%, right? But I can tell you right now, within the next 2 weeks, we are coming here. So what would I look for, like on the Dow? What would I look for at this level, right? I would look for something around like the 5-minute. I would look for something like this, right? So here's the green, right? Here's the green line. I personally would look for us to chug away up here, right? Pop up into it, okay? Pop up into it. And I would like a break of structure. I need a 5-minute break of structure. If I get that 5-minute break of structure, say I can identify a, you know, an imbalance with a IC candle, then I take the mitigation, stop loss, you know, above, you know, the high somewhere in here, okay? And I'll sell it down. And then I would, you know, potentially look to see if we can sell it, you know, into some of, you know, this area right here is where I'd be looking to sell it to. But it's, you know, that to me, that's a risky trade. You know, I personally would be just looking for buying opportunities to go up. And the catalyst, I'll tell you right now, I probably won't trade this. You know, I probably won't trade it because I'll be done. Remember, Friday's a holiday. Thursday's NFP. All right. I can guarantee you, we potentially, look at this candle right here. That candle's 60 points on S&P. 60 points. I guarantee you, we can potentially see a 60-point spike during NFP. Bam, right here. Take out the highs, and then we see the drop. I have imbalance right above where? Right here on S&P? Yeah, what do you mean, am I concerned by it? So you mean like, am I concerned that price is going to go into here? So again, I am looking for buys, right? My overall goal is to target these highs. Why am I interested in this 1 hour candle right here, right? And let's break it down, right? Let me break it down for you. So just so that there's no confusion. All right. We had triple tops. All right. The market then is selling off and we have a pullback, right? We have a pullback. I'm looking for a sell in here in this candle. This is where I potentially would be looking for the sell. I'm not looking for the sell in here. I'd be looking for the sell in here. Okay. And the reason I'm looking for the sell in here is, just follow with me here, right? So we have price selling off, right? Price selling off. We have a pullback, price sells off, and then we have a larger pullback, right? So what did this candle right here, this, let's see, is it a 30-minute candle? All right, we'll call it a 30-minute candle, right? What did this candle or these candles right here, what do they do, right? What did they do? Can anyone tell me what they did? All right, all right.
Entice buyers.
Entice buyers, and the reason it enticed buyers, right? It's because it broke structure, right? It broke this 30-minute structure. So what are people thinking? Oh, look, we broke structure on the 30-minute. We're going to take a retest and we're going to buy, right? Anybody that was selling and they were trailing their stop loss, what do you think happened? They closed out of their trades or they got stopped out in profit, okay? So this here is where, this would be a, I wouldn't call it an institutional candle because it didn't grab liquidity, but this is an area of focus of a point of interest that I would be looking to see how we react, right? And you can already see on the S&P, right? We reacted exactly how I would have liked to get us a reaction. Let me close this out. Look at that. I mean, to the T, no drawdown, and boom, we sold off. Okay. That's it. I'm not looking for any sells. If we break above that, I mean, for me, this has already happened. There's no justification for this to come back up and then sell off because we've mitigated out of this candle. This candle, this order, whatever institution created this has now been closed out. So my next area of focus would be in here, but it's just unrealistic. The agenda, think about the agenda, right? Why would the institutions create a sell-off from here when they can come up here and take all of this liquidity, right? All of these sell orders here, they can grab. So we are going to come up here, right? We are going to come up here, and then is potentially where we're going to get our sell-off. All right. And I do think we are going to get a massive sell-off. All right. One of the things, again, going into this, I'm going to be looking to see if we get any reaction, right? If we get any reaction off open interest. Okay. We can come here and look at, oh, wrong side. Hold on. Here we go. S&P 500. I mean, it's the same thing on S&P, right? We had that open interest on the 18th that closed out of their orders. And again, this is just one thing that I've kind of incorporated into my trading plan. I got it from Lex Waves and I got it from John Fibonacci. Come on, open up. All right, so you can see, right, S&P futures, look at that drop in order volume, right, from open interest. All right, that right there was a clear indication that we were going to start to see a move by institutions to sell off. The fact that they closed out these orders up here. Okay. All right, so let's move on. Let's take a look. Again, I printed this out. I threw it in my journal. I was very, very excited to see if we were going to get a reaction and what happens from there. So I had all this. I did a play-by-play for my personal self that I threw in all my journals. One of the things, and just to compare, right? So I was looking, is this the Dow? Yeah. So you can see these equal lows down here that are still intact, right? The reason I wasn't tremendously concerned by going down to here is because on the S&P, we had taken that liquidity, right? You could see this wick broke below here. And these are benchmarks, right? So they kind of, they're supposed to follow each other. You know, the S&P technically, and oftentimes is the laggard, but it still grabbed the liquidity. All right. So we'll close that out and then we'll move on. You know, it was, like I said, I was hoping to get a pullback into this candle here, but we never got it, right? Do we need to pull into this candle? Eventually we do. You know, but I don't see us coming all the way down here to go up. I see us going up and then dropping off. So that's just my personal opinion. All right, let's take a look at EuroCAD. You know, yeah, EuroCAD was a trade that I took today. Now I had two separate trades, right? I not called out, but I had sent a harmonic. I don't know if you guys watched that video I did for the scanner. Again, I'm not a huge scanner trader, but I do understand that for newer traders, you know, it kind of gives you everything you need, right? For trading, minus the mindset. But how can you incorporate some better ROIs? Because that's my biggest beef with the scanner is the return on investment. It's like 1-to-1, you know? So you can take 10 of those trades, be profitable on 7 of them, you know, and on a 1-to-1 ROI, it's, I mean, you're still only, for me, for 1%, I'm only up 7% and I've risked 7 trades, you know? But so Euro, and then we'll just go over here to the harmonics. So Euro Chef was a good trade. Again, we had equal highs. I personally wanted to see those equal highs just get popped up, and you could see we did just momentarily pop up. So I just incorporated the new fibs on it. Price broke, right? Broke. This 1 hour candle closed below. We already had a SAR flip. I entered on the very next candle, which was right here. And then I took another entry off this 50% when price came back up. So I took 2 entries, and I was personally looking to get right into this candle is where I wanted to go. I ended up closing out just before it. My 94,600 is where I closed out, which was on one of these wicks right here. I closed out. But if you looked at it, I think if you went off the scanner, it was only like I think it was like a 2 3/4 or 2.5 to 1. But by taking it off of here and crunching your stop loss to 15 pips, you were able to catch 4% on it. All right. Again, a really nice setup. Where do I see UCAT or UChef going? Again, I'm targeting these lows right here, right? I'm out of the sell. I'm going to wait to see what we do, and then I want to try to either get in off of this candle here or in this imbalance right here is where I want to get, because I want to take this sucker up. You know, if you look at the daily chart, I am looking to take, all right, already. I am looking to take it up here is where I want to see, around the one whole. And if you look, that's a nice whole number of $1. So that's where I'm looking to take this bad boy. And we haven't been up there since last October. So we'll see. We'll see how this plays out. We also have some nice equal highs right here. Okay. Sitting at 96500 that I'd like to target as well. Nice. Look at that liquidity sitting up there, right? So that's my target. The agenda fits. We did have a nice drop, and I'd like to get a playoff in here. All right. While I'm here, I'm just going to go over this Euro JPY. Again, this I wasn't even looking at, right? You could see trend line break. For me, it wasn't worth the trade, right? If I took it, let's just say to the previous high, I'm risking 50 pips to take it to, we'll go to the 1 hour time frame here, to take it to anywhere that I would have liked to have taken it. you know, this candle right here would probably have been my area that I would have taken it to. And you could see I had my stop, you know, my take profit there. That's not even a 1-to-1, right? Not even a 1-to-1. So for me, this wasn't even a possibility. I would never have taken this trade. Could you have? Sure. You know, I mean, look at that. You went 40 pips in profit, right? 40 pips in profit. But I mean, you risked 50 pips, so it wasn't even 1%. So for me, it's not even worth taking on the risk for it. GCAD, right? GCAD is doing exactly. If you watch that video, I had said that I wanted GCAD to just keep following down this trend line, and you could see that's exactly what it's done, right? Where do I want GCAD to go? I have a 5-minute open candle, which is sitting down here. I would love for that to come down here, and potentially we can play off of that, right? Get a break, you know, maybe a stop below that, and then take it. Uh-oh, there we go. And then take it somewhere in here, right? We have a lot of imbalance in here. Take it in here. I mean, you're already looking at a 6-to-1, you know, even if I want to take it to a 3-to-1, you know, just to take profit 1 would be a 4-to-1, you know? So I'm going to leave this on here. I'll keep an eye on it. You know, I've got my alert. I know GCAD fooled the crap out of people today. You know, I mean, sure, you got some good pips, right? I mean, if you entered off the scanner, I think the scanner gave 77 pips total, but I don't even know. I don't remember what the stop loss was, but it was ridiculous. The stop loss was down to here, you know? So, I mean, you're talking 40 pips. So, I mean, just under a 2-to-1. So again, for me, that's just, it's not worth taking the risk on, you know, and that's just my personal, you know, trading plan. You know, I'm very selective at how I take the entries. And then Eurocad was fantastic if you took it. You know, this is where I got one of my entries off of that candle in here. Risk was 33 points. I took my first entry, or my first take profit was at these equal lows, right? Because I wanted to see what happened here, right? I wanted to see what happened here. And if you follow, right, what happened here, right? We had what? We had support. We had liquidity sitting here, right? So we had money. And then what happened? Price FU'd, right? FU'd, and immediately we take off, right? Immediately take off. So I wanted to see what happens in this range here. And you kind of can see what happened, right? We got a reaction. Boom, price came in and moved away 30 pips, right? So we did get a reaction. But I'm still holding mine. I'm targeting, I'm taking Eurocad down. So that was really it. That was all the trades. I mean, this was from last week. So, you know, curious to see what happens. Let's get over to the other charts. Yeah, let's get over to the other chart. All right. So that's with the harmonics. Eurocad, fantastic. Now, Eurocad for me, again, I'm holding Eurocad. There's some imbalance here. I'm going to just be adding positions because in the grand scheme of things, I am taking Eurocad down here, right? We're going to the bottom of the earth for this. And I think that's where we're going to go. I did take an entry off this 30-minute candle, right, to start the week. And the reasoning behind that, right, we had equal highs. And I know I think Steady called a sell off of it. I know a bunch of people were looking to sell Eurocad, but I was looking in this candle right here, right? This is where I wanted to sell from. This 30-minute candle, okay? That's where I was looking to sell from because I figured we had these highs, we had a bunch of liquidity sitting up here, and the catalyst was there. Bam, let's take it. So my original position was sitting right here. Stops just above it, risking 25 pips, right? 25 pips on it. Now, if I took the loss, I took the loss. No big deal, right? If I took the loss, guess what? We're going higher, right? We're going higher. We're going way up here, you know? So I was willing to take the risk on, you know? I was willing to take the risk on. My original target was right here, 134 pips, right? Just under a 5.5. So we'll just call it a 5-to-1, right? Caught a 5-to-1 on it. took another entry off the scanner, which gave me, I think, like a 3.5. And I am personally looking to see two things, right? I am looking to see if we can, I could delete this. I've got my alert here, but this wick right here, I've got some interest in it, right? I want to see, and I dove into it. There's a couple of things I'm looking at. But I want to see what happens, right? This 45-minute is a potential, right? If we go 50%, right, off the 45-minute, that may be something of interest that I want to look at to potentially sell. You know, I am short on it. I'm short 100%. When you risk 1%, do you risk based on current balance or your counter free margin? No, I risk of balance, you know? So for me, you know, like forex.com is a 50 to 1, you know, they give you 50 to 1 is the margin they give you. I'm only taking at most, okay, yeah. At most, again, I'm only having at risk 6%. Now there's sometimes, like I'll tell you right now, I have like 9 open positions, right? But of those 9 positions, all of them are at break even. Okay. And some I've taken partials off. So I have plenty of margin available. You know, I think, I think I'm only at like something like 40% margin, maybe like 42% margin. So I have plenty of margin available. You know, but yeah, I definitely, I don't do 1% of a free margin, because if you do it off the trading view, like it's ridiculous. Like if you put 1%, it's like not even 0.5% if you have a couple open trades. So yeah, you know, but this is potentially the 45-minute candle is something I like. The 30-minute is the same size candle. The only thing about it is you can see this next candle actually mitigates into that candle. So that's why I'm not too crazy about it. Now, this is the one that I am looking at, right? I am looking at like, go to the 15-minute. Hold on. Yeah, so 25 is where it's at. That's what I want to look at. So the 25-minute is the one I'm looking at, okay? You can see there's a small amount of imbalance sitting in here. So I'm looking at, you know, 53.46. I'll be honest, I will go to 56.40, 53.45. Nice quarter theory number. And that's where I'm looking, right, to take another entry.
And I have a question on the 25-minute. There's a liquidity sitting right above that candle.
Yep.
You have it marked off. I have marked off on it. There's that candle on the 25-minute. Is that a breakup structure? Would you consider that a breakup structure if it goes up to there?
So here's how I would play it, right? Hold on. Let's see.
Because, you know, we talked about having like the you know, it hits one, just go to the next order. It's the next one. Go to the next order. When do you stop putting orders in?
I'll tell you right now, when do I stop? Right up here.
Yeah. Okay.
That's when I stop. Okay. And the reason is because of here, right? So this was the top, right? We can say this is the top. If you look at the 1 hour, right? We broke 1 hour structure, right? We broke 1 hour structure. Let's see what the 4 hour. We broke 4 hour structure. Okay. So we can honestly say that, and let's just see the daily. Hold on. You know, so we can honestly say that if we break this down here, daily time frame, we are bearish, right? You can see, you know, a lower high, higher low, lower, higher low, higher high, higher low, higher high, bam, we broke structure, right? Broke structure on the daily. All right. So when we're looking, let's say on the 1 hour. All right. We have this area of focus and we have this area of focus, right? If you just look on it, take a regular fib on it, right? Now I'm not saying this is where we're going to start to see the pullback, but this lines up at the 61. This lines up in between the 71, 78. So I'm going to take the risk here. If I get stopped out, I'm going to go here. If I get stopped out, I've got this area right here that I'm looking at. All right. I'm going to give myself 3 opportunities. You know, I've bring
that fib because Dollar was talking about using the fib and then finding the mitigations within the fib.
Yeah. So, and for me, like I'm not looking here, right? Because I mean, we just moved over 200 or 200 pips, right? We moved, my bad, excuse me, 191. We just moved 191 since last night. I'm expecting at least 50% back. So I'm not looking in here, right? The reason that this gives me some, some focus that I need to investigate is because of that wick, right? I mean, you can see we're just trotting along, boom, right?
Yeah, randomly.
So that's kind of why I'm looking in here. So I'm going to take this, right? I'm going to take it off that 25. And like you said, perfect, right? We got liquidity up here. So if I get stopped out here, guess what? We're taking the liquidity, and this is the next area that I'm going to play off of, right? Now, I don't know if I think the 25, let me see what the 15 look like. So would you put 2 buy limits in there with your stop losses in as well? What do you mean buy limits, Bonnie? You mean sell limits? Sell. Yeah. So exactly. I'm going to have, when I'm done and I'm putting all my orders in, I'm going to have 1 sell limit sitting right here, stop loss right here, 2nd sell limit right here, stop loss right above it. And then I'm going to have a 3rd one right in here, stop loss just above it. That's kind of how that's how I'll do it. Again, I got stopped out here. Great. I'm just going to come here and and I'll be honest, this is a better ROI. Let's just look at it, right? So here, I'm risking 14 pips, right? This one here, I'm risking 7, So not to say that it's going to happen, but let's just say, right? Let's take it. And my first area of focus is going to be right in here, right? This area here, because this is an FU candle, right? We had liquidity, bam. So that's going to be my first area of focus. So this is we'll call it 27-1. This is an 11-1. So I'm going to have both sell limits in. I'm really hoping they stop me out and we go to here. I'm really hoping this one gets stopped out. Now I'm willing to put the 1% risk in because I don't want to miss it, right? What if it reacts off here, doesn't come here, and we go? I would still, I'd hate to miss out on 11% because I was too greedy to take only the 27. So that's how I look at it. Sure, I'll lose 1%. You know what? That means that I'm gonna gross 26%. I'll give up the 27-1. I'm gonna lose the 1% because of this. So I'm gonna walk away with 26%. My bad. I'm gonna go home and cry about it. I'm honestly, I get upset sometimes now when a perfect example was AJ. I had a lower order on AJ that was a stupid stop loss. It was like 22 pips. I had a higher AJ entry that was like 7 pips, and it didn't stop me out on my first one. And it went to TP. I only made 5%, where the higher one was like a 13% that I would have made. So I was pissed. I was like, come on. It was like 2 pips for my stop loss. And it didn't stop me out. I was like, oh, all right, whatever. It is what it is. But yeah, so that's what I'm looking for on ECAD, right? I am going to be looking at this area here, right? This has my attention because this was an area of liquidity that got ran, right? This was the FU candle, and boom, we took off. All right, so that's an area that I definitely would start to look at. But once we break this, listen, we're off to the races. I'll tell you right now, once this gets broken, we are off to the races, and I'm taking it to here. 1.50600 would be actually my take profit. Okay. So keep an eye on those areas, right? That's going to be my area of focus, right? This 25-minute. Let's just look. I want to see in here if there was. I know that 25-minute looks nice. Let me just see what all right, hour, 45-minute, 45 minutes there. Wait, let's see. Just mark that 45-minute. Yeah, 45-minute and the 15 are the same. So that's where I'm going to go with. All right. I am going to go off of, I'll go off the 15. And like I said, and then if we go higher, this is the candle I want to investigate, right? I want to go into that 10-minute. Let's see, this 10-minute right here. I would still stay with that 10-minute. I'm not gonna. I mean, we're talking a difference of 1.5 pips, right? 5-minute. Yeah. Okay. So the 10-minute it is, right? So that's going to be my next area to sell from, and then stop just above it. And if this gets taken out, all of this has been evenly traded. So there is no reason for them to come up here, right? None whatsoever. You can see, look at this 10-minute candle, right? From that open, this candle mitigates out of it. So there is no reason for them to go any higher. 10-minute open. Will you drop? Yeah. All right. So I'll leave that fib on, but these are going to be in my three areas, right? I could delete this 30-minute. That's where the original sell was, and then clearly the stops would be just above those highs, right? Just above those highs. And then, like I said, my target, I'll tell you right now, this would be pretty nice. My target would be like that -27, right around, 1.5190 maybe, or even if you want to take it to 200, right? To 200, you're still looking at a very, very nice setup. But that's where I would personally be looking to take it until we do something with this, right? Until I see that, if we break it, and here's the link. If we break this, then I'll just catch another entry, right? We can always find entries, bear with me. Let me put my AC down. Okay. We talked about UCHEF, right? We talked about UCHEF. This was my buy yesterday. So I am going to be personally looking at an entry in here or in here. This one here, I mean, realistically off the 1 hour, you could just take it off the 50%. Because it's only like a 7-pip stop loss. What would make those 3 entries invalid? What do you mean? They get stopped out. That'd make it invalid. You mean, oh, okay. So like, what would make me delete my orders? If we get down to here, right? If we two things, right? If we get into here and we get a reaction off, I would delete the orders. I wouldn't want us to get into this candle before mitigating up. And then obviously if we take out these lows. So if this comes all the way down, if like next week I still have these orders pending, yeah, no, I'm going to delete them. If this area gets taken out, because I'll tell you right now, just game planning, right? Looking at the big picture, once these lows get taken, I'm taking this to the moon, right? We are going up, because I'll show you, like, I'll tell you right now where we're taking ECAD. We are taking ECAD right here. I still have my arrow on it. There it is right there. We are taking ECAD right there. That is where I'm taking ECAD to, once those lows are taken right here. So yeah, that's the game plan. All right. So anyway, UCHEF. One thing I do is delete too quick as well, and then I see it goes. Yeah, like I said, the only reason I delete my pendings, and sometimes I might have a pending there for 2 weeks, because price has just gone sideways. AutoCAD was an example of a trade that I had for like 2 weeks, So real quick, UCHEF, obviously these are my targets, right? Where we got liquidity. All right. So first attempt is going to be off of here, stop loss just below. Second attempt is going to be right off of this green line, right? It's just off of the 1 hour open. I mean, if you want to go off of the imbalance, you can, and stop loss just below it. They're relatively small stops, right? We're talking 18 pips for that one and 12 pips for that one, right? The entire move is pretty nice. Like I said, I would rather take it off of this bottom one, but I'm not going to give 100 pips away. You know, this will be a nice setup. I'm not going to walk away from, you know, an 8.5 to 1. If they want to give it to me, they'll give it to me. Yep, no problem. Juan. Have a good one, man. You know, if they want to give me this, they can give it to me. You know, but that's, I'm going to have order pending here and order pending here. But that's UCHEF. I'll throw this one in there. You going to bed, bud? All right. Good night, son. All right. There's UCHEF. Euro CHF is another one I took. I actually, I took it from here. These were the two orders I had pending. I ended up taking it off the 5 minute open, which was right in here. This was a phenomenal trade. Closed out just before the market closed. I got about 4% out of it. But I'm still looking to see if we get one more push up, right? If we can get one more push up into this area here, I'll be looking to sell. Because I'm looking to sell right here. These are my targets. These are my targets. If you've never seen cleaner equal lows, that's what they are. So I can tell you right now, these things are going to get smashed. And if you just look at structure, right? We go to the daily structure. We have begun to go bearish, all right? Right? Just remember what I said. When you're thinking about structure, the only thing that's important are the lows. It's not the highs, right? So you can see we had a high, we had a lower low, a lower high, a lower low, a lower high, a lower low, a higher high. But now if we break below this low here, we are still bearish, right? We are still bearish. I'm sure a lot of people got faked out by this high saying, oh, you know what, we're going to buy, we're going to buy, we're going to buy. And I'll tell you right now, this candle right here on the daily tells me this ain't going up. We are going to continue to go down. I mean, just look at the 1 hour. We got a really nice reaction off of this area to sell down. So I personally would just be waiting for an entry opportunity. I'll be honest, EuroChef moves very, very slow. I was not a fan of trading it, especially trading EuroChef and UCHEF at the same time. It was very, very painstakingly slow. I mean, in the course of 20, we'll say 18 hours, it only went 68 pips. All right. But I would be looking still to see if we can get up into this 50% of this 3 minute. All right. This is the area I'm looking, 50% of the 3 minute candle. Actually, you can still see my order. I have an order sitting right up there. That's where I want to play. I took this last week off of this open and took it down. So I want to take it. I definitely want to walk it down some more. So EuroChef is one that I'm going to be looking at. This is what I'll be playing off of. Stop loss just above the high. So, I mean, you're only risking 8 pips. Make sure you account for your spread. And I would take partials at these equal lows. All right. And then just see if we can walk it down. All right. But that's the setup I am looking for on EuroChef. And if we break these lows, right? If we break these lows, I'll be looking for a pullback, right? I'll be looking for a pullback, because if that's the case, then we take a fib, right? Just hypothetically say we come down to here. All right. You can already see where my selling areas are. And look, we got nice imbalance, right? I potentially actually be looking at this candle in here for a selling opportunity. So, but that's only if we break the lows, right? Only if we break the lows. All right, because then structure-wise, we made a new low. All right, Euro USD. So here's what I got on Euro USD. Right, we caught the sell up here, sold it down beautifully. Price came up. I actually sold it down from here, and I am now looking to take another sell. Right. First question: where is the money? Right? Where's the money? I mean, there's no question, right? There is no question where we are going, right? It's just a matter of now they want, if they can oblige me and pick me up. So my first order, right? My first order is off of this 1 hour candle. And yes, I know we have nice equal highs, right? I know we have I mean, just look at the 15-minute, right? We've got equal highs. Okay. Would you wait for the New York session to take that sell on your I would, Dave, I would wait for when price gets up here, I'm taking it. Yeah, I'm not worrying about the session time for it. You know, can you look at the 1 hour candle in EuroCAD? Is there a reason you would skip this and go above? Yeah. Give me one sec. Yeah, I'm going to put 1% risk on here. I've already got my order in there. I'm going to take it because if for some reason it stops me out, right? The logical next place is right here, right? This is the logical next place. So you can see this is going to be and I want to target these lows right here. This is a 10 to 1. This is a 16.5 to 1. I dare them to stop me out. I want them, right? I double dog dare them to stop me out. Please activate, stop me out. Let's go right here because I will play here. If this gets stopped out, then I'm coming right up here. I don't see us coming up here, right? I don't see us come up here. If we look at the dollar, right? If you look at the dollar index, right? We've just been nice structure, right? Nice structure. I do see these equal lows. We may target into that, which would be the second entry. My first entry is right in here, okay? So I do want them to pull back, but just look at the dollar, right? Where are we going? You know, what is their agenda? Their agenda is we're taking out these highs. Just like EU has these lows, right? Just like EU has these lows, I know these are going to get targeted, right? So I'm willing to take 1% risk here, 1% risk here. All right. I do prefer this one here. But again, I'm willing to put the 1% risk on here all day long, you know, just in the slim chance that, you know, that smart money isn't actually driving this, as it's going to be retail. And they're like, oh, we'll just take a quadruple top and we're going to sell it down. All right. So that's what I'm looking at EU. And I'll look at ECAD again real quick. Hold on. Oh, AJ. What do you mean what would you say? 1 hour candle? Which 1 hour candle? This 1 hour candle here? Is that the one you're talking about? Yeah, the reason I won't take it is because I need at least a 50% pullback, right? So here's the 50%. So from this swing high to this swing low, I would need 50% at least to pull back. You know, this probably is like right around 38.2. Let's see. That's probably right around 38.2. Yep, that's right around 38.2. But me personally, I don't trade off of 38.2. I need at least 50% of the move. So I would be looking at this candle right here is where I'd be looking. I mean, it's up to you. You know, I'm willing to give up on that, you know, but if you're saying, you know, if you want to say, all right, you know what, I'm going to put 0.5% or I'm going to put 1% on here and just, here's my stop loss, you know, there's nothing to say you can't, you know, you're going to have, you know, 2, 3, 4 other opportunities to get into this sell, you know, but I'm personally not willing to risk off of that move, especially because we got this here, right? Especially because of that. Let's look at Euro GBP. I caught a sell up in here off of a 1 minute candle. Really nice entry. My personal next entry, and just to give you the bigger picture, right? Hold on. Where is Euro GBP going, right? Well, first and foremost, right? We had equal lows. We had the FU candle, right? So immediately, this is an area of focus, right? That wick is an area of focus. You can see on the weekly time period, right? On the weekly, we have, or was it the daily? Yeah, on the daily. Okay. So on the daily, we have essentially traded into this candle up in here, right? And I think it was the 30-minute that was trying to snag. You can see my 30-minute up here. I came within, I was really ticked because that was a really tight stop. It was only like 8 pips. This is the 30-minute candle I was playing off of right here, right? There's a 30-minute candle. What happened, right? You could see we had a break of structure. We kind of just came here. This was the last pull, right? The last retracement before a ridiculous melt, right? I mean, let's just look at the pips, right? 465 pips, right? That was the last up. So I wanted to see if I can get into that. I had a sell order sitting there and my alert went off. My order didn't get filled. 7 pips. It was an 8 pip stop loss, right? So just to give you an idea, it was an 8 pip stop loss. We'll do 9 with the spread. I'd be sitting at almost a 14-1 right now. But I ended up getting in off of a 1 or 2 minute candle, off of a break of structure. You know, just to give you an idea where I got in. No, maybe it was a 5-minute I got in. I got in. I want to say it was off this candle right here. So it was in here I got in. Let's see, 1240, 330. Yeah, it was yesterday. Yesterday's when I got in, right around here, and I just held it. And then I got in again this morning, either here or here. I'd have to look at the numbers, but I want to say it was here that I got in off of this candle or this candle. But where am I looking again now to get in another position? I'm still holding some partials, but this is where I'm looking, right? We've had equal highs, right? Equal highs here. We have some imbalance that I'm looking to target. I would like to see how far we can get up, right? So let's just measure the move. I want to see us. So if we look at it, right, mitigate it out. Let's go on the bigger time frame. Hold on. Let's do this. We'll go in replay mode and we'll just see what's been mitigated out of. All right. So even trading, even trading, even trading, even trading. 1 hour is all mitigated out. 45. We do have a gap in here, but I don't want to see it go way up there. I mean, it could potentially, but I don't want it to go way up there. We do have, this is too low, even trading. All right, so let's see the 30-minute. So I'm just going to highlight this imbalance here. Even trading, even trading, even trading. Bam. All right. Let's do the 25. I'll tell you right now, it is going to be in here where we're going to take another entry. Just by looking at the price action. See how nice and even this is all in here, right? This is nice, evenly traded. You know, everything is when it impulses, comes back to mitigate, drops. Potentially, let's look what the 5 will give us. the 6 minute. All right, if there's a 5 minute in there, that's the one I'm going to take. Let's see. So, like, I don't know if you guys, if I'm just going too fast, but I mean, when we're looking here, right? So, do you notice how, so this up, price comes back, mitigates out, right? Now this candle needs to get mitigated, right? Bam, mitigated out. So now this candle last up, bam, mitigated out, right? Last up, bam, we get mitigated out. So we have even trading all through these ranges on the 5 minute. Let's look at the 3. This is very curious in here, this wick. That's something that we'll see what we can find. All right, well, that's something. We can look potentially at the 3 minute right here, right? That 3 minute may be something of potential. Same thing down here. 3 minute open. Look at that 2 minute. Yeah, that's probably where I want to put some risk on right there. That's an area that I would like. We're in between the 71 and the 78. Yeah, that's where I want to go. If for some reason, let's see. Okay, so you can see just below the 71 is that 3 minute open. That's potentially where I want to put some risk on. You know, it's a relatively small stop, 3 pips, you know. So I'll tell you right now, I personally probably would only put 0.5% risk on it because it's 3 pips. You know, the ROI alone on 0.5% would be worth the risk to put an order in. You know, three pips, just taking it to, and this would be one of my targets right here, these equal lows. Just taking it to there, it's a 37 to 1. And remember, I'm only putting half. So, I mean, you're looking at, you know, realistically, what, 16% is what you're going to be making off of a 0.5% risk. And if that doesn't play out, then I'd be looking at 50% of this 1 hour candle right here. Okay. 50%, which kind of lines up with the 88.6. All right. I'm going to move this down to this area here. I want to see if those lows get taken. So that's what I'd be looking at. And then I'd be looking to take profit here, and I want to investigate to see what happens here. I want to see if we're going to break through it. You know, the negative 27 lines up perfectly, which is one of my nice take profits off of fib. I want to see us get into this equal lows, and then we'll go from there. So Euro GBP is one that I'm looking at. Again, just go to the 3 minute, you'll find that candle in there. And then if we do get above that, I'd be looking in this area here around the 88.6. All right. All right. So there's Euro GBP, AJ, right? AJ. So I took a loss on AJ, right? Here's a perfect example. All right. That's why it was beeping at me. My order, I think my order got activated. We'll see. I'll have to look to see if I got activated. So here's a perfect example, right? We had equal lows, right? And then we had some equal highs here. So I wanted price to ultimately come on up, knock us out of here. All right. This was an area that I wanted to play off of, and then target these lows down here, right? Target these lows down here. Stopped me out. Actually, it came within 3 pips of entering, right? 3 pips of entering. And I was looking to play off the 2 hour, right? The 2 hour is what I wanted to play. Let me zoom in on it for you guys. So you see that 2 hour candle? That's where I wanted to play. You could see how close I came. It gave a reaction. I thought I missed it. You know, it dropped 60 pips. All right. But these lows are still intact. So without a doubt, I can tell you that this is the target, right? So I got stopped out of here. No biggie. My next entry, and I think it's already moving, but we'll see. My next entry is, let me find the candle. I did a no-no. I didn't label it. Let's see.
Hey, Mike, I just dropped the AJ chart in the chat, and I have a question, basically.
Yeah, go ahead.
So that 50% of that yellow that I had marked off, I think you have it on the 1 hour. Yeah.
Yeah.
There's a bunch of wicks within that happened like right after the sell. You see those like 5 right there. There's like a couple wicks that are right by. So it's buy to sell, right?
Yep, buy to sell.
And then, so like the 3rd or 4th candle after the buy to sell, there's wicks within the buy to sell. That's
right.
not considered mitigating.
It is. Like if you look at it, hold on, let me see.
Because like I can't ever decide. I'm like, oh, well, are we coming back around? Like, you know, we're circling back around, right?
Right.
And we've circled back around, but I'm sitting there looking at those 3 wicks, and I'm like, well, has it been mitigated or not?
Yeah, we'll dive into it. We'll look at it. Was this the 30-minute? Did I label it? Yeah, I guess so. All right, so 75,217. Right. So you can see this 30-minute candle, right? That's an area I'd be taking some risk. And then on the 15-minute, you could see the 15-minute candle just above it, right? That 15-minute candle. That's where I'd be looking to take some risk. I took an entry off this, so this can get deleted. I'm going to dive into that. Give me 1 sec.
Yeah, no worries. I was just curious because
Yeah.
I can't ever decide which.
So here,
we'll take
a
candle. That's it.
Oh wait, this is where I wanted to go. Son of a gun. All right, hold on. Give me 1 sec. Let me look in here because I want to label it. All right, so 45, 30. That's what it is. 30-minute. Bam. All right, so it's a 30-minute. 30-minute open. Okay. So that's where I'm looking to play. Stops just above it, right? So the stop, I think, is like 20 pips. Oh, it's a little larger, 35 pips. 35 pip stop loss is what I need to play. But so let's look at, it is at what price? Let's see. We're talking 74.53 area, right? So it's in here, right, Andrew?
That chart I sent you was live. Yeah, I mean, it's like I literally just had it marked up.
Let's see. I'm doing it in a replay mode. I just want to make sure.
Okay. Cool. Yeah, no worries.
What time frame is this? This is the 1 hour. So yeah, it's right in here. Okay. So let's take a look, right? What happened in this time period? So just on the 30-minute, you could see like I had equal highs. What did this candle do, right? This candle took liquidity, right? And that's, I think, why I was interested in playing off of it, but it didn't mitigate, right? You could see there's that small amount of imbalance and it didn't go into that candle. Now on the 1 hour, well, the 1 hour didn't go into any up candle.
Oh, you're on replay mode. I'm sorry.
Yeah. That's why it's just easier. So on the 30-minute, yeah, these wicks, right? This wick didn't mitigate it out of anything. Now, what did it do? It did take liquidity, right? It did take liquidity. Now it did mitigate out of this 25, but look, that 25, this here is still valid. This here is still valid. 15 is still valid, right? You can see this nice 15-minute candle. 10-minute, yeah. So this didn't mitigate any of this. So this is still a good play, right? That is still a good play, and I think that's why my alarm was going off.
Yeah, I think maybe I'm not being specific on the question. So when they do the buy, they did the buy to sell, right? On the 1 hour.
This was the buy to sell.
Right?
Yep.
And see those two candles that you have yellow boxed in, right, with the wicks right next.
These.
Yeah.
No,
Is
it didn't mitigate. So in order for what we're talking about a mitigation. So on the 1 hour time frame, right? Let's just look at this 1 hour candle, right? 50%. Okay. We'll drag it out here. So here is your buy, right? The buy order came in, sell order immediately came in, right?
Right.
Once it breaks below here, because think about it, they're not, think about it if you're hedging, right? If you're hedging. So you put a buy here, all right? And then immediately here is where you put your sell at this price point. Are you closing out your buy here? No, you can't, right? You have to wait until it until you essentially get into the negative, right? You have to go into profit on that sell before you can mitigate out of your buy candle. So these candles here do not mitigate out of this position.
Okay.
Because if you look at it on the 1 hour time frame, right? The buy order came here. So they would actually, if they closed out here, they would be taking a loss. And they don't take the loss, right? They just they'll hold that position for however long they need to hold it, you know. So hopefully that makes sense, you know.
Yeah, that does. Because I always look at it, man. I know I'm overanalyzing it. I know I'm looking like, oh, look at these wicks. Did that count as mitigation or not? But
honestly, that's why I wait, Andrew. That's why I wait and I identify the engulfing candle, because the engulfing candle tells me that, so on a buy to sell, that tells me like this candle here broke. So now this is an accurate IC candle, right? This is the accurate institutional candle, the buy to sell. And then here, boom, mitigate out, right? Sell, this was your buy right here, sell, mitigate out.
Because they're at zero right there.
Yeah, correct. Well, they're at zero on the, you know, on the right in drawdown. Yeah, exactly. You know, but now, and this is the cat and mouse game, right? So this could have been one bank, right? Mitigate out, and then another bank came in and said, "Nah, F you," and they did this, and then, you know, now they're dropping it down. So that's how, you know, that's how you have to read it. So there's a lot of traders that would just look at this candle right here and be like, all right, I'm going to measure 50% and that's where I got to take it to. Where for me, I would rather find that engulfing candle and then play off the engulfing. You know what I mean? Because that shows me at the point where price broke, you know, and they're in drawdown, right? This candle here doesn't tell me that they're in drawdown, right? The engulfing does, right? The engulfing tells me that they're in drawdown, and that's where they're in drawdown at. So that's how I look at it, you know.
So what candle are you looking for?
So here, hold on, let's go to replay mode because it's easier.
Yeah, that confused me a little bit.
All right, hold on, ready? Watch. So this is the candle, right? This is the candle that we're looking to play off of. So let's just go down the time frames. 25, 15, 6, 5. Oh wow, we might not get an actual engulfing on it, man. Look at that. We don't have an actual engulfing. But now, if you're
talking about actual engulfing within the buy to sell.
Right. So what I would be looking for was an engulfing that engulfed this one. But now you can see, right? So this candle here, right? This is that last point. Price does drop below it. And then this wick, that was the function of this wick. This wick mitigated that candle, right? This wick right here. That was exactly what that did. And simply because this is where, right, you could see they were in drawdown. They came back to mitigate out. And then from there, it's just playing off of, let's go to the 15. Actually, you know what? Let's go to the 30. Hold on. Where are we at? Hold on. We're down here. Yep, we're down here. All right. So in this candle, right, that is what's been mitigated out. So now hold on. Let's just get a couple more candles. What the hell happened? Did it completely erase that thing? No, for the love. Let's go back.
So okay, that one that you're saying it's open right there.
Right. So this 30-minute candle, is the one that I'm looking at because this one is open, right? You could see 30-minute candle hasn't come back in. And then if we go to the 15, right, you can see that 15-minute candle is still open, right? This 15-minute candle is still open.
30 and 15. Okay, so yeah, all right, I see what you're talking about.
Yeah. Now I'm personally going off the 30 because the difference between the 30 and the 15 is 4.5 pips.
Okay.
You know?
Yeah, that 1 hour 50% buy to sell lands at like 70% of that 30-minute candle.
Yeah, it does. Okay.
Something like that. So it's like right in the area.
Yeah.
But yeah, I think you're getting at. Are you looking at the open or the 50% of the 30 minute?
I'm doing the open. I'm going to do the open. You know?
Because it's so small, right?
Yep. Yeah, I'm going to do the open. And then, like I said, so if you measure this candle 50%, right? So it's going to come to 50% either way. My stop is going to be above this, right? Above these wicks. So
Above those wicks, not where I have my stop on the larger portion of the candle.
you're way up here. No.
Yeah,
Yeah.
like a 20. It's like a 26 pip stop.
Yeah, no, I'm not going to go. I'm not going to go that high because, like I said, if you look at the smaller time frame, right,
Right.
that candle's been mitigated out of, right?
The
So
big buy to sell.
yeah, so this portion up here has been mitigated out by that, right? Right.
Right.
Here. Mitigated out, and then this is just even trading. So we had, where's this stupid thing? We had this candle, right? Obviously, like, let's just look, right? So yeah, that candle mitigated out. We had this candle here mitigated out. This candle here, right? Mitigated out. So now we are getting, let's go to the 30-minute. So here's your 30-minute. That's all that's left, going into that open. That's why I did the open, because if you look on the 15, right, this portion has been mitigated. I'm sorry. I just confused myself, but hold on. I did too many. What was I on the 5-minute? Yeah, I was on the 5-minute. So, right, you could see this mitigated out. This mitigated out. That's a 30-minute open, and this candle mitigated out. So that's why I'm going to go off the open, because the 30-minute open hasn't been mitigated, right? We still have this.
They missed it by like a tenth of a pip.
Yep. Like. Yeah. And honestly, I mean, sometimes, like, I'm wrong. Sometimes that tenth of a pip was actually mitigated out, but this broker, right, didn't acknowledge it. So,
Okay, cool.
but that essentially, that's exactly how I look at it.
And then, are you going up to the next? Are you going up higher? If it, like, I think I had another candle marked off.
So if it goes above here, I've got a 30-minute candle right in here.
Right, like 75.21. Yeah.
Yep. Yeah, exactly. That's where I'm going. And that one's actually going to be, there's a 30-minute and a 15, but I'm going to play off the 30-minute, right? I'll play off this 30.
21, and then you're wrong. Where are you wrong? Like, in terms of where we're saying now, or we're going up and not.
Yep. Yeah. So I think I have it.
It's like I struggle with.
I have it marked. Hold on. Yep, right here. If we pass here, we're done.
4 hour.
Hold on. Let's go to the 2 hour. There it is, right there. See that 2 hour? Yeah. If we pass there.
2 hour. Okay, so at like 70.5, 76. Yep. No,
76 112. Yeah. That's the point where I'm calling it a game. All right, AJ, you got it. Now, just keep this in mind, right? So when we're looking at correlation, right? If indices are going up, Japanese yen is going up, right? Is appreciating, which means on face value, AJ should be going down, right? If indices are going up. However,
indices go up, JPY gets stronger, so JPY pairs fall.
Well, hold on. Let me don't write that down yet, because let me just give you the correlation, right? But now the Australian dollar is an anti-per diem, right? So when indices, right? So when we're in a risk on environment, right? When we're like, all right, things are great, when the Dow and NASDAQ and S&P are in a bullish market, that means the Australian, the Canadian, and the New Zealand are strong. Okay. So what you have to look at is, I'll tell you right now. So like if we're looking for S&P to take the highs, right? I'm also looking for AJ to go up. Okay. So we may get stopped out of here and have to go up to here, right? This may be the area that we, the point of no return. Because if I'm looking for S&P to do that, but now there's nothing to say, right? Because think about it. Let's just look at the Dow, right? I'm looking to buy the Dow in this area here, right? I'm looking for this drop into here so I can buy it up.
Right.
Same thing with AJ. If this was the entry and we take these lows right here, I'm happy with that, right?
Yeah.
And then let's go up. And then when we get up here, we got these targets down here, right? So I personally, AJ is a really good depiction of what the indices do. It's not directly correlated, but if they're going up, chances are US 30, NAS, and S&P are going up. If they're going down, it's the inverse of that. Now it's only
screwing it up.
No, you broke up. Say that again.
Right, because it's odd, it's essentially screwing up your JPY.
Right, exactly. So if you look at everything else on the JPYs, right? If you look at it like UJ, if you look at UJ, right? UJ as we got the drop. I'm sorry, as we got the drop on the indices, UJ was going up. Now this is fueled obviously by the dollar, because US dollar has been just hell of bullish lately, right? You remember what remember the US dollar index, right?
Right, yeah.
That bullish moment, same thing on UJ. So AJ though.
The dollar screws up.
Yeah.
Dollar screws up UJ.
Yep. So just understanding the correlations, you can see here, bullish indices, look what's been happening, right, on GJ. You can look at, I don't even think I've ever looked at Swiss franc JPY. I have something marked up. I don't know what the heck I was doing with that. But, same thing, CAD JPY, right? We definitely had some, well, this is just sideways. Yeah. But if you look at the Japanese yen futures, they move in concert with the indices. But the Australian part is when we're on a risk on, when things are great, the Australian's going to thrive. When we're risk off, the Australian and New Zealand are going to be weakening. All right.
Okay. So it's basically the indices are going up, JPY strong, except for odd JPY, which is going to follow.
Mm-hmm.
Odd JPY is going to follow the indices, not the yen.
Right. Correct. Yeah. And it's strictly because of its being an anti-per diem, and like I said, the odd New Zealand and the Canadian, but the odd is really the strength behind it. So if you had a trade, like if say we're definitely going in an all-out bull market, right? This virus thing is over. Everything is hunky dory. If I had to choose between CJ, NJ, and AJ to go bullish, I'm going to AJ, because the Australian is always, it's the bigger currency. They've got, stronger trade, so that's going to be the driving force.
Okay.
All right. All right. So let's move on. NU, right? New Zealand US dollar. Again, first question, where is here? I'll clean some of this up. Where is the money, right? The money is very clear where the heck is at. We are going here, right? We are going here. I actually may potentially get into this trade right now. It's off this 1 hour candle, stops just above it. It's an 8 pip stop, targeting these lows, right? So I'll be looking at take profit, probably like 63.85 is where I'm looking at it. Are you? Yeah. I think I got an alert that my order activated. So, but I would be looking to take this. And of course, if this doesn't happen, then I'm going up to here, right? I'm going to go to the 1 hour. There we go. Much better. The bias was there. It was a very clean setup. This was the last up. No reason not to get in it. And again, what are my targets, right? My targets are in here. Now, the only thing I would be cognizant of is this in here, right? This candle right in here. Start looking, at 6,400, the whole number 6,400, because what happened, right? We had a ton of liquidity that was being built up. We had that liquidity grab, all right, to take it higher. So they potentially will need to mitigate out of this position if they want to go higher. But I don't see, right? I don't see them leaving this intact. I see a run on stops and then going higher. All right. But regardless, I would set an alert for like 6,400, because if you start to see an engulfing, I would just close out of the trade. But this is where I'm looking. I'm looking to play off this 1 hour candle. And if I get stopped out here, this is where I'm going next, right in here. All right. And give me a sec. I have a green line set. I just don't know why. Was it the 4 hour? Yeah, 4 hour. All right. 4 hour, and the stop would be 23 pips. So H4. You can find on a smaller time frame a better setup. I'm going to go off the 4 hour just because it gives it a little room to breathe. And even on the 4 hour, it's a really nice ROI, right? We're looking at 4.5 to 1. So NU does have room to come down, right? So I'm just curious to see if we will fall on it. It's honestly more indicative of what the dollar is going to do. But if the dollar goes for those highs, I'm going to be writing this down. But so I'm either going to play off the 4 hour up here, that 4 hour right there, or I'm in the trade right now, just activated on the 1 hour here. Okay. But I'll send this out. There we go. All right. Let's see. These are what I have on my watch list. So last week, I remember talking about AutoCAD, right? How we are in distribution, right? I sold it from here off of this, but it has literally been in a 65, 70 pip for 8 days. So remember what I said, right? You can already, I'll leave this up for demonstrative purposes. You can see we have equal highs. So back here, I said I wanted to see a run on all of these highs, break of structure, come back, mitigate out of that structure, and then I'm selling it down. Well, we have our play, right? We have the agenda. It's already in front of us. The playbook, we've what's his name? Bill Belichick, not Bill Bel. Yeah, we've Bill Belichicked it, right? We've got it. We've got it on video. I'm going to wait. It's very simple. I'm going to wait for these stops, these highs to get run. We've already created a triple top. Okay, it's going to happen. I'm not going to set a limit order on it. I'm simply going to allow it to happen. Wait for the break of structure. Actually, let me set an alert for highs taken. And then I'm going to sell it down. My immediate target are these lows right here. And then I would be looking in this area to potentially buy it, right? I'd be looking in this area to potentially buy it. But I'm more interested in the sell. I was trying to buy, actually I might have bought it from there. I don't know. That looks old. Let me delete that. Yeah. So, but this is a clear distribution schematic. I've got it boxed in. I guess I'll extend this stupid box because it's just going sideways. But we have really nice, some really nice Wyckoff distribution going on. I'm looking for that UTAD, right? That upward thrust, which will take out these highs. It's the upward thrust is just the opposite of the spring. So I want to see that spring, mitigate out of the spring, and we take it down. And just ballpark figure, right? Say hypothetically, it's something in the neighborhood, even 30, let's say 30 pips, right? Just 30 pips. I mean, we're still going to catch, over a 5-to-1 off of it. Okay. When it happens. Do you have a good distribution schematic to print out? Here, so go to that website that I put in the chat. It's Zach McDonald's personal website. I'll throw it in the thing again, and he's got it on there. Oh, so just go here to begin Wyckoff, and oh wait, he better not have taken it down. Did he take it down? Really?
No, he left it on there, he left it on there the other day. It was still there the other day. You just had to.
It was literally there an hour ago when I did it.
It might
Oh, there it
be-
is. Hold on. There it is. There it is. All right. So yeah, just scroll down and you'll see the distribution. Let's see, accumulation. Here's distribution right here. Here's a distribution. There's an actual distribution off of a chart. And you have this. So yep, there you go. Absolutely. Yeah. So in this instance, actually, here's what I'm waiting for, right? I'm waiting for that UTAD, that UTAD to take out those equal highs in phase C, and then we'll catch the test of it. All right. It's just being patient. I've been patient. I've been waiting on this stupid thing for over 8 days. So we'll let it play out. So here's AU. Remember what I said if last week or the week before, I said, if these equal highs stay intact, I want to see it come down. I want to buy it from this area here. The SPY in our freaking Telegram apparently told them, because I had an order sitting here off the 15-minute open. Yep, I had an order sitting right here off that 15-minute open right there. It was a 20 pip stop, and you can see my entry was at 68.30 and it came to 68.32. So yeah, I missed that. That would have been a nice trade because it would have been up 84 pips, but it's gone. But I would be looking to target, I want these highs to get run. That's what I'm personally looking at. So I'd like to, and again, if indices are bullish, like we're anticipating, right? The S&P to take out those highs, I would be bullish on the Australian, which is going to give this some fuel. And I would be looking, I may look a little lower, but I'm looking off of the 30-minute, 50% of this 30-minute candle, right? This 30-minute candle right here, okay? 50% of that comes in right here. We can crunch the stop. The stop doesn't have to be above 70.40. All right. So 70.40 is where the stop has to be. All right. So it's about 12. If you want to give it a little more room, like 13 pips, depending on your spread. But I'll be targeting these lows. All right. They left these lows for a reason. I'll be targeting them. And you can see, I'll be patient on it. 19 to 1 ROI. All right. I'll be patient. It's again, structure wise, right? On the daily. I mean, it's ugly. I ain't gonna lie. It's ugly. But ultimately we are in a, I don't even know. I couldn't even tell you. This is just ugly. It's really the only, with these highs here, the only possibility that I'd be willing to take on is a break of those highs. I mean, there may be something in here, but it's just ugly. There's other trades. I'm not going to force it. If we get above here all day long, I'll take that. But other than that, this doesn't give me any reason to get into a trade. I wanted to get into here, and do you guys see why I wanted to get in here? Right? It's pretty clear. Let's just look at the 1 hour. Right? Obviously, what do we have? We had some nice support, FU'd, and then we took off. Right? So there was actually a 1 minute and a 15-minute candle that I was trying to get off of. Let's just go to the 15. Yeah. Yep. So I wanted to play off of this 15-minute candle, or there was a 1 minute candle in here, right? And you can see this didn't actually mitigate all of that 1 minute candle, but it did mitigate the 15, right? So I wanted to play off in something in here, and instead, it probably what it did was just mitigate the imbalance, you know. So it is what it is. No, no big deal. But that was where I wanted to buy from. I've had this thing marked up for 2 weeks, and I came 2 pips shy. 2 pips shy. So it is what it is. All right. Went over euro. Oh, no, euro odd, right? So euro odd is, yeah, I don't know. I tried. I bought it here. I was taking it up to the highs. That's done. I am looking in this area here, right? I would be looking. I did buy it here to take it up. We clearly have some liquidity resting up here. Okay. I do want to take this up, right? You can see these equal highs. I do want to take it up. It's at an area where it likes to trade within. Okay. But I do want to take it up. I want to try to get into something to go up on it. It's just, it's not giving me anything right now. Maybe if we get down in here, or if we get in here, that's where I'd be looking. But right now, nobody wants to be in a trade for 2 weeks, right? For 2 weeks. It's just stupid. So it did take the highs, right? It did grab liquidity. So, it is what it is. I just have it on my radar. I'm not really looking. EJ. So last week we sold it off of here, right? I was looking a reaction in this area here. We got it sold off. I'm personally not looking to really trade this. Hold on, let me clean this up. I'm not looking to trade EJ simply because, and here's an example, right? So I am looking, the whole reason that this is kind of like backwards is the euro, and I don't know if you guys have saw, I've read the whole Brexit thing is back in play. The European Union is now giving an ultimatum to the pound. That's why the pound sold off like it was hot to start the week. So the euro is getting strength, which is why Euro USD is kind of just going its own separate way. I would be looking to buy this, but I would be looking for buys on Euro JPY personally. I'd be looking at buys to get up in here. I just personally am not going to trade it. There's cleaner setups. AJ I think is a cleaner setup. UJ is a cleaner setup. For me, when I look at this, my first question is where's the money? I really don't see any other than here, right? Everything else has been taken out. So to me, there's no liquidity, meaning for me, there's no trade. All right. Now, GJ, I wanted to target these stupid things, right? And then obviously we have some clear liquidity sitting right down here. All right. So I know we're going to sell off. It just took the highs, right? It took the highs, but it created equal highs, right? So now it's just a wait and see and what the heck she wants to do. Okay. We have equal highs on both ends. I was looking at in this candle for a reaction off of here, which it gave. But I don't see really anything that I want to get into, potentially if we get up in here, I highlighted that, but everything else has been evenly traded, right? You could just see all that nice, there is potentially this on the 30-minute, right? We have imbalance. So if we get up there, that may be an area that I would sell GJ at, but we're well over 100 pips from there, that's 207 pips. So, I'm just going to kind of let GJ play out, but that's an area where I'd be looking to sell from. You know, would I buy it? Potentially I would buy it, you know, if, you know, I see this coming down, but nothing really that I want to get into, you know. Uh, GU. So I got this on GU. You know, it's funny because if you here, you know what? Hold on. If you so fun fact, my my IM membership has been repoed. Um, if you do the ACH where it's your checking account, because I got tired of paying that international transaction fee. Um, they're supposed to take your money out or do your billing 7 to 10 days before, but they screwed up and only did it the day before. So I don't have my membership until tomorrow, even though everything says active, but they're waiting on my bank to say that it cleared. So I can't even access the harmonic scanner. But I guarantee you there's an H1 harmonic printed because I see it here. There should be at least. I see this to this to this to here to here. There should be a shark. Yeah, I sent MoneyGram. I went to Publix and sent MoneyGram. You know, but there should be, or if anything, it should be up here. I don't know if anybody can see on the scanner if there is one, but I see this going up. Right, I see it going up. I personally want to I want to sell from a 5-minute open right here. Okay, you can go to the 5-minute candle, and it just makes sense for me to get up in there. Right, we have this is the 5-minute candle I want to sell from. It is, you know, a nice. You can see from here, this was mitigated, right? Not only was it mitigated there, but it came back to re-mitigate it. So this is the 5-minute candle I want to sell from. Stops just above it. You know, there's no reason for price to go any higher if we're right. So we're talking about a 5-pip stop loss on GU, and that's it. 5 pips. It will if and this is one of the reasons why, right? So look at the 4-hour time frame, right? What kind of structure are we looking at? Anybody? Bueller? What kind of structure are we seeing? Everyone should be on board with this. Downtrend, right? All right, so watch this. Ready? Watch this. So high to low, right? We're going to go high to low. We're going to do a fib. All right. Price goes to the 61, crushes through negative 27. High to low. Okay. Price almost gets to the 61, but at least gets a 50%. And then finds support at the negative 27. Okay. So next down. All right. So I am looking for an entry off the 5-minute. If we can get into there, that'd be an area. If not, another area that if you want to take the risk would be right off of this 4-hour candle. I actually didn't even look at that, and I might, because that's a tight stop loss for a 4-hour candle. 18 pips, I'll take it. 18 pips, it is right off that. And even if I take it to the lows, right? I'm looking at a 9. Yeah, you know what? Son of a gun, I'm putting this in. So I'm going to take it. I'm going to take it off this 4-hour. Now, let me just clean up all these fibs because this looks like garbage. All right, let me move this down. All right, how far are we from there? Oh, 25 pips, man. Yeah, so I'm going to do that. I will be willing to take this all day long. Stops just above this high, right? Just above this high. Off the open is where I'm looking. And then my targets. So let's look at targets. Hold on. So I mean, you already see, right? We got some liquidity sitting down there. I do want to see this area get hit. All of this has been mitigated out, right? This was the buy. Let me clean this up. Um, okay. Yeah, I would be looking to target like 122. The whole number 122 is where I'd be looking to target. Um, oh, there we go. All right, but at the very minimum, take it to these lows right here where we got some liquidity. All right. 122.50 might be a decent area to take profit, but 122 whole number is where I'd like to probably run it to. And we're looking at some pretty good ROI. So I'm definitely going to be putting it off that 4 hour. And then again, that 5-minute open. So let me put this H4 open. Yeah, there we go. That looks nice. All right, here's that. NJ, not really looking at anything. We just took out these highs. I was looking into this candle, maybe up here, but this is just stupid. To me, this is sideways. I really don't want to trade it, UCAD, I've been waiting for a very long time to get off of this 15-minute candle back here. Yeah. This 15-minute candle right here. 30-minute candle, that's what it is. Yep, that 30-minute candle, 50% of it. That's where I'm looking. You can see equal lows, the FU candle. They need to close out of that. I am bearish on UCAD, but I ain't gonna sell it from, I'm not selling it from that area there. I do want to take it, but to me, there's just no clean setup right now. UCAD is doing its own thing. It's choppy, and like I said, I prefer other setups than that. UJ, right? UJ. What do I see on UJ? What are we on a daily? Man, this is just stupid. Obviously, we are going to fill in all this in here, right? That was last week. I can delete that. Here, hold on. Let's we'll just start from scratch. Yeah. So daily wise, I mean, we are going to come up into this. We are going to come up into that. Let's for the last 8 days, 200 pips. That's not bad. Let's see. So I remember this trade. This got a lot of people. I was buying it in here. I was buying when this happened. I went to break even, and then the big FU came. Mitigate it out. All right, let's see the 1 hour. Yeah. You'd see that on the 1 hour. Imbalance here. This mitigated to that. Yeah, to me, there's until we form some equal lows. No, that low took out. Until we find some liquidity, I'm not looking to trade this either. It's these were clear equal lows. U.S. oil. I haven't traded oil in a minute. I still have my orders pending. I've had my order pending here since the beginning of June. I still got it's going to happen. I know it. I got my order pending here, and I'll take it up. But you can see, what do? We filled in that gap. So, yeah. I mean, It did take a little falter, but it's all good. I'm not too worried about it. We do have some nice equal lows right here, though. Look at that. Look at that. We may get a run. We may get a run on that, right? May get a run on that. We'll see. And gold, I'm bitter at gold right now. I'm very bitter at gold. I don't know if you guys remember on Thursday I sent this out. What was it? On the 24th, I sent this out that I was looking to buy off the 1 hour. You can either go, and I said either 50% or you can go from the open, right? So you can either go 50% or go off the open. I think Armando was selling it, and I said if we get down here, I'm going to be buying it. And obviously, before the equal lows were printed, my stop loss was just below. I think I went off like 1747 was a stop loss. This happened Friday. And then my take profit was these equal highs, right? Look what happened. Look what happened. Did you? Yeah. Congrats, bro. Congrats. Yeah. Well, I didn't trade it on Friday because it was Friday. So yeah, me and gold are bitter. I waited freaking, look at this, man. Look at this crap. I waited 2 whole days, and then finally on Friday it does it. Yeah, good for you, man. Good for you. But now we've taken liquidity, right? I am honestly waiting to see for the drop because we will get a drop. All of this liquidity has been taken. Let me delete all this. All of this has been taken, right? So, what's the next game plan? Well, the game plan is this is going to get run, So me personally, and I guarantee you bounce back's going to call it. Same system, man. Let's go to like a 5 or a 15 minute, right? Look at that. We have some money sitting right there. If we break, right? If we break structure, find an imbalance or something, that we can play off of, mitigate off, and we're going to take it down. And these are going to be our targets right here. That's exactly what I'm looking at. I'm just going to wait. I'm going to wait and see,
Like so on gold, I'd sent a chart to Lex on one of his sessions or whatever. But now that we've cleared out the equal highs, does that sell to buy no longer in the 7? Like, so basically the move that happened last Friday, right?
This past Friday or the Friday before?
Oh yeah, sorry, this Friday. Yeah, this most recent Friday.
So this move right here.
It's a sell to buy, right?
I wouldn't honestly say it's a sell to buy.
Okay.
Personally, and the reason I don't say it's a sell to buy, just because this is just sideways. I don't think it's because none of this is either a sell to buy, right? Because think about it, this really didn't like FU on some liquidity, right? This was just the last down candle, right? Same thing. This, you could say it grabbed liquidity, but realistically, all it grabbed was this, and this. It wasn't a tremendous. It wasn't like it wasn't like this. Right now, we definitely have liquidity sitting here, right? Because we have, in order for price to react and move like it did here, there was a lot of money behind it, right? A lot of money. This, lot of money behind it. This crap, no. This is a tug of war, man. This is who can outlast who. Up, down, up, down. Look at this candle right here. Up, down, up, down. Up. So this to me doesn't tell me that there was a lot of orders sitting here. I think this here was just to mitigate out of here,
Okay.
and then obviously this is an institutional move because.
Now we're starting.
All right, good. All right, hold on. I got the wheel of death. Hold on. Here we go. Let me close out of. Come on, drag. Come on. All right, so that's closed. Let me close this. Let me clean that. Come on. There we go. All right. Let me close this out. Bam. All right. There we go. Back up to 78% memory. Yeah. I got to buy, I definitely need to buy a higher computing Mac. You have a question on US 30, 15-minute chart when you have a mode. Yeah. I'm going to go to US 30 right now. Bear with me here. All right. So let's exit out of that. Let's go to US 30. All right. You said 15 minutes? All right. What do you got? Let's look at the 15-minute.
Okay, so are you able to hear me?
Yeah, I got you, man. Go ahead.
Okay, awesome. So you see that candle at 25,620, the 15-minute candle? Yep, right, that candle right there. So I have my eye on that as far as potentially tonight, sometime tomorrow morning, or maybe probably tonight, and like later on, like London Open, where we might react off of it to go back to the top, or is that something? And I know it's underneath the zone of basically UB, because what I was looking at was if you see where the dollar sign is, you have the line of 20. Let me see. I have 25,700 is basically. Let me see. So when I'm planning my charts out, I plan out. I point out a candle before, like right now, basically, and then when the London opens up, and I'm gonna see if it pulls down to that because the bias is bull, obviously. Is that, would you take something off that 15-minute candle? If I know you're not trading rest of the week, but for the US 30,
you can. Yeah, hold on. Let's see. So, all right. So we got a pullback 78.6, right? What did this one do? Let's see. So this one went 78.6. And then, yeah, I mean, that lines up right around the 71. So just looking at it off the 15-minute, right? You know, this wick mitigated out of that. This mitigated out of that. Now, the only thing that I would look, right? The only thing I would look is, hold on, let me just see something. All right. So what is the, if we look at it, right? What's the agenda? What do they need to pull back into? Obviously, yeah, this. I'm just trying to see if we can drop down. I mean, that's only 65 points. I mean, it ain't the end of the world. But let's just see if we can, hold on. Let's see what we can dig into. All right, so that's the 1 hour. 45, 30, 25.
On the 1 minute, you can see a fast move down, and that was basically kind of started the entire,
this was 3 o'clock, the start of the last hour of trading. So
yeah.
I guarantee you what it was a, let's just see. Well, I know what it was because it missed my stupid order. 3 minute. All right, so let me just see. Is this 50%? Hold on. Yeah, it went over 50% in that. This here has all been evenly traded. So
okay.
It's one of two scenarios, right? They're either going to play off of here, or they're going to come down and play off of that 1 minute that my original order got missed on, right? Because this was the 9:30 open, the FU, right? Boom, we take liquidity and we go. And I mean, technically, this move mitigated out of that candle, right? But if you look on the 1 minute, let's see. On the 1 minute, this lone soldier right here is still sitting there. So,
I see what you're saying.
you know what I mean?
Okay.
I mean,
Yeah.
again, the way I would play it, I would just have buy limits on both. If you get stopped out of one, you know it's going to go to the second. You know?
Yeah, with the FX choice, thank God I can do 1% now, because with KOT or Hugo's way, it was just impossible.
Yeah,
Just
yeah.
because of the
No, I'll tell you, for people with smaller accounts, I mean, honestly, I went to them because if you notice, you don't get charged a commission on
Nope.
on indices. So if you would only imagine the amount of money I paid in commissions last year on trading indices, so like FX Choice for me, I only trade oil, indices, and gold on FX Choice, and I love it. You know, I mean, I love it because I mean, I don't need, you know, it's great for smaller accounts because a 0.01 is 10 cents per point, you know?
Yeah,
So
it really helps out a lot.
No, yeah, it
you're
does.
not freaking out.
Yeah. Yeah. I
Okay.
mean, it is. It's, I got my brother to jump on it. You know, it's great because you can, yeah, you don't have to stress out about US 30. So many people got stressed out because they would over leverage, you know? Like I was in a conversation today in the big IM Trader account with a kid who was on a NASDAQ. Yeah, I mean, he did a 0.01 on a $450 account. And I told him, dude, you know, I traded the NAS and I had a 20-point stop loss, meaning I risked $20, and you twin traded it at 0.01. So even if you traded my position, you risked $40. You risked 10% on your one account. So, and I don't think he understood that, but you know, it is what it is. You know, I don't, you know, to each his own. But yeah, I would play off that 1 minute candle, or, I mean, realistically, even that 15 minutes, not bad. Because like I said, taking it up to this high right up here is still, what was it, like a 4.5 to 1, I think?
Yeah.
Yeah. I mean, yeah, it's almost a 5 to 1. So I would take it off that. Now, like I said, if you want to get in and see if you can crunch that, I'll tell you what, even that 10 minute, 50% of that 10 minute might play out nice. Yeah. I think your best bet is either 50% of that 10 minute or just go off the 15 open.
Mhm.
And then if that gets stopped out, just go to the lower one, you know?
Okay. Perfect.
And again, like, you know, going back to when we first started the whole Mark Douglas thing, just like I'm explaining it, you know, if I was going to trade this, yeah, I'd put a buy limit here and I put a buy limit on the one. If I wake up tomorrow morning and this one got stopped out and this one is 300 points in profit, I'm happy, you know, because
Much
this one,
happier, actually.
yeah, I'm telling you, when I tell you guys that, like, I hope I get stopped out because I want to get the top entry. And if I get the top entry, you know, the emotions that I have to deal with on not getting into a trade because I wanted price to get up so high and it didn't go as high is definitely worse than getting stopped out. You know, for me, 1%, listen, I'll give up. Like I said, I'm allowed 6% a day. So a 1% loss for me is nothing. You know, I don't care about it. I don't even notice it. You know, it's such a small percentage. And, you know, when you're, I mean, think about it. You're going to risk 1% to catch 5 on this move all day long. And then, you know, if not, all right, you know what, that's fine. I'll give up that 5% I'll give up that 1%. And then I will, you know, grab you a 28 to 1, you know, I'll tell you right now, I might just put a buy limit off this 1%. I might. We'll see.
Yeah, I must say with the I think with the forex.com and just trading from the trading view kind of helped out a lot with just risking 1%. And
Yeah.
you actually, I'm shocked that you actually don't care when you risk. I mean, it's you're supposed to do it, obviously, right? But we all make mistakes and stuff like that. But when you risk 1% only, you actually are careless. Not careless, like carefree.
Yeah.
trading without any issues.
Well, it's exactly, you're disconnected. You know, there is
Yeah.
no, like, sometimes I'll look and I'll get the alert, you know, oh, if I was in a cell, it says, AJ buy, it was sold for a buy. So I got stopped
Mhm.
out. I'm like, oh, all right, I got stopped out. Sounds good. No big deal.
Right.
That just means that my next entry is going to hit. So like right here, you could see it's making its move down. I personally,
Yeah, actually, I just got hit TP right now because I had these equal lows from the imbalance from the top entry where your alarm is set.
oh,
I had
okay.
a sell limit right there, so it actually just got hit TP. Actually.
Oh, well, good. There you go, man. There you go. Yeah, I'll tell you what. That S&P. Somebody asked me if they should take a sell on the S&P from my line, and I said, well, I'm personally not going to do it, but I'll tell you. I mean, that was kind of a good trade. I mean, look at that. That was your stop
That one played
loss.
out.
That was man. You could be at 3.5% right now if you didn't listen to me about deleting that order. Oh well, it is what it is. But so me personally though, I'll tell you right now, I'm not a fan of trading the indices during non-London or non-New York time. So like if this came down here to the 15, I'm not saying that it won't react off of it, but there's just no volume. So I mean, just look at how slow it's moved, and say
Right.
when it closed, I mean, we're talking 122 pips or 122 points in 6 hours. And it's just choppy, man. It's up and down. It's up and down. I mean, it's not like one of those where you're like, all right, I'm 40 points in profit. I'm just going to go to break even. No, because it can come right back, and
Right.
keep. I mean, look at this. And this time here, I mean, it came back. So I'm not a fan of trading it. I can always catch a move during London or New York,
Okay.
so, I mean, that's just how I play it, and, it's, again, I don't need to be in the market every minute of the day. So it's not that I don't trade during Asian because, I do. I mean, if there's a trade opportunity, I do. I'm looking at
You
this
still pay attention to that US 30 15 minute.
15-minute. Which one?
We had 25.2, like somewhere around there. Remember we had talked about it.
25
Since they ran, it's like 25.2 area.
right down here.
Yeah.
Okay. What about it?
No, are you still like paying attention to it, even though that we ran the equal highs?
Yeah. So I'm not like my buy limit. I deleted because the whole premise of this was to get us up to these highs. If I'll tell you right now, like if yeah,
So
I
not necessarily taking a buy from you.
yeah, I don't want us to come back down here. I guess would be my thing. Like I don't want us to break this low. Right. If we break this low, it kind of is gonna. Yeah, I don't want to break this low because I mean, think about it. So, what was it on the 4 hour? Did we have good structure on the 4? Yeah. So look at the 4 hour, right? Here, you know what? Let me go to a clean chart. Is this a clean chart? Yeah, it's a clean chart.
Yeah, if you break that low in the 4 hour, now you've made a lower low.
Well, I mean, we got to come all the way down here, but I like the fact that we broke these highs, right? You can see these highs up here. We broke these highs, and I want to leave this as a higher low, right? So now I want to come up. I want to tackle into some of this up here. Those trend line traders, I'll tell you right now, man, whoever was trading, was it daily? Let's see. Yeah. Whoever was trading this on the daily got faked out. Oh, it's dropping. We got it. It's going to go to the freaking hell. Whatever, we're going to the ends of the earth. Boom. Nope. Nice try. So, yeah, I like the fact that we took these highs, especially because, everyone was thinking, oh, we got a double top, this, what exactly, what do we see here? Right. Oh, look, it's an M, so it gave you, 729 to, this is in the way, 729 to 430. So it gave you, 300 points. And then if there was ever an FU candle, it was that. It was that. So, but I would like to see these equal highs taken. There's a lot of money sitting right up here. That's
Now,
that. What's that?
now are they seeing the inverse head and shoulders?
Yeah. Yep. Yeah, you can see it right here. Oh, you know what? I haven't done a head and shoulders in a long time. Hold on, let's see.
Use your triangles. Got to use your triangles.
No, the head and shoulders. You got the head and shoulders. Look at
Oh,
that.
they have actual. Yeah,
Remember-
that one, whatever.
I used
it
to.
looks like
I used to do it all the time. What's your buddy Oren Wright does it, right? Isn't he the big head and shoulders guy?
I don't know. I remember after you said just do the opposite of the scan.
Dude, I'll never forget that. What about remember the thing I recorded that time off of Go Live that I sent you about OPEC? When OPEC, I don't even know what OPEC is. Oh well.
Yeah, there's a lot of things that go on.
I don't know, bro. I don't know. All right, anybody else got anything else, man? He's a huge head and shoulders guy. Yeah. He cracks me up sometimes. He cracks me up. I really don't, I stopped trading off the head and shoulders. I like just doing my little smart money thing and doing that. But who's watching anything else? Anybody got anything else they're watching? Hey, listen, I've been bored, so I've been looking at some stocks as well. I made some good money. I made some good money on some stocks lately. In case you guys are wondering, hey, if you guys want to get into some stocks, just so you guys know, Royal Caribbean, when I got the alert already set, if Royal Caribbean breaks $20, I would suggest you buy it because we are going to come up to 140. It might take a couple years, but these are investments. So I'm looking at that. I'm looking at United Airlines. When we break on the next drop, when we break below $17, I'm going to be buying because we've got some nice liquidity sitting up here.
Hey, Mike.
Yeah.
When you say you're buying either the Royal Caribbean or the United Airlines, would you be buying through Forex.com or would you be buying through FX Choice or would you be buying through your investment account?
No, investment account. Yeah. It's
Okay,
just buying
so
shares. Yeah, just
Okay,
buying shares. Okay. It's not leveraged, so but it's good investment. All right, man. Have a good one, Andrew. Yeah, it's actually what I did was I threw a couple bucks into Robinhood, and yeah, it's just easy. I bought a couple hundred shares of actually Halliburton. I made some good money so far in Halliburton. I made a purchase today on it, and I bought last week. I bought last week in here. Where was it? June? No, right here. I bought in here. So I'm looking to hold this because you can see where the money is. So I bought it at like 10.50 and I bought it again at 11.95. So I'm just going to hold it. I'm going to hold it way up here to 57. Yeah, I've got a couple that I'm looking at. Norwegian. Yeah, I've got a couple, but UAL, United Airlines, is the big one I'm waiting on, and Royal Caribbean is the big one I'm waiting on, dude. Because I'll tell you right now, if I can get, and I'll cost average it, meaning so the minute I get the alert, I might buy like a quarter of my shares that I want to buy. I'll buy a 20. If we get down to 15, I'll buy it there, and I'll tell you right now, I'm dropping some money if we get to 5. If we get to 5, I'll drop some money. Because man, if I can get in at 5 and in 5, 6, 7 years, realistically, it took from where it was down here was 2012 to 2018. So it took 6 years, but 6 years, you're talking about $130 a share profit, and if I can get in at $20, oh boy, so, and I can guarantee you.
Getting into you.
Yeah. I can guarantee you right
now.
That's
getting into the oil. Sorry. Go ahead.
Yeah, absolutely. Absolutely. Look at that. You got 1, 2, 3. So the next big drop is coming right there. It's coming right there. So we'll see.
Huh.
We'll see how it is, man. Carnival. Let's see. What's Carnival? Anyone know? Carnival Corp. Let's take a look at Carnival, man.
I have a a buy order in at $5 on that.
On 5? Yeah. Well, I mean, look at the double bottoms right here. You got some liquidity sitting right here. Yeah, I mean, I would definitely start to look once it gets below 7. I would, you know what? I'm going to add this one right here, CCO. Yeah,
Did
so
you have
like,
to invest in U.S. oil when it was down to $4 or free negative?
so on FX Choice, I bought at a penny. And I have, like I said, I've been buying Halliburton on the petroleum side, and I bought Marathon. I bought some Marathon stock as well. Marathon was like at $6 or something like that, and it's currently at like 19, I think. So, yeah. So Gary, I would wait, man. Yeah, obviously, I think it's definitely going to I'll tell you right now, at the very minimum, it's coming here, right? You know, there's some liquidity sitting down there. So I would start to look at around like 1050. I would start to look. I might put an alert in here. I might start buying at 1050, and then again when it gets down to like 7. What let's see, where was that? It's high. Let's see, it's high. Yeah, see, I'll tell you right now, I mean, Carnival's all right, but I think Royal Caribbean's the better deal, man. I mean, look at Royal Caribbean. So Carnival,
Yeah, I see that now. Okay.
Carnival, like let's say at a discounted price, you get it for $7, right? $7. Potentially, I'm looking to start buying around 1530, and if we can get to 5, right? If we get to 5, which happened in the crisis, right, of '08, but you could see that it's a double bottom, right? There's some liquidity sitting down there. If we can get to 5, dude, I mean, 145 to 140 is this right here. They may be, if I can land this, I might get like a Warren Buffett tattoo on my head or something like that, and just call me Warren Buffett. I mean, yeah, that's that. But I like, so far, the two that I'm really getting my eyes on are United and this. And then Boeing, I did buy Boeing. I did buy Boeing in here. What was it? I bought Boeing. I bought Boeing here, right? Yeah. I bought Boeing on this drop here. Yeah, it was like 167 is where I got in. I'm waiting. I want to get in 120, and I think we might be able to get one more push, right? You could see in here. If we can get down to like 110, I'll be buying some more Boeing. Because Boeing
So are
ain't
you
going.
basically just hedging kind of thing?
Not hedging, just cost averaging, right? Because I'm only
Cost
buying.
average, sorry.
Yeah, I'm not selling.
Yeah.
Yeah. So, you know, like I have an idea of what I want to invest in each company, you know. So like, just say hypothetically, I want to put 25,000 in a Boeing, right?
Mhm.
So what I did was I put, you know, 5K in at 167. If we get down into this imbalance here at 120, you know, I'll put like 15. And then if we get down below here, you know, maybe into this area here, you know, I'll put the rest. So
Gotcha.
like I've you know, I've kind of, these are all the stocks that I've been looking at, and just kind of, you know, I looked at it, and I had mutual funds that I had like a deferred comp with, and like some of my retirement stuff. And I was like, wait a minute, I looked at the statement, and I'm like, wait a minute, I'm paying $260 some a month for somebody to invest my money. I was like, no. So I called up the two companies that handle it. And I was like, hey, so what are you know, talk to me about your investment strategy for my money. You know, they gave me the answer like they read it off a piece of paper. And I said, all right, well, run me through your idea on, you know, because I asked them, I said, you know, all right, so you got me in small caps. Talk to me about the small caps. What are we looking on the chart? You know, I'm like, what's the ticker name for it? So he gives it to me. I go, all right, so what are we doing? Where are you investing some money in this? He goes, well, we're thinking about this price. I'm like, why are you thinking about that price? That's a high price. Why don't you wait for it to get lower? Well, because the analysis shows that, you know, potentially it's not going to get lower. I'm like, all right, bud, do me a favor, send me a check of withdraw all my money, send it to me. I'm going to reinvest it. So yeah. I'm not paying $260 some a month for them in fees for them to manage my money when I can do it just fine here. So, but yeah, so that's it. Southwest is another one, man. Listen, if you guys can get, I've got Southwest on right here in 22. Like if we get around the 2250, that's where I'm going. So.
One of the reasons I was interested in Carnival is because if you cruise either Carnival or we cruise Princess all the time, and if you have I think it's 100 shares, you get, I think it's $250 per cabin in
Really?
onboard credit every cruise. And I don't know if Royal Caribbean has the same program, but so that's one of the reasons I'm just kind of waiting for that, just for the value of that, because I mean, even at $10 a share, honestly, it'll pay itself back in a couple cruises. So
yeah, absolutely.
So
yeah. I'm not a fan of Carnival cruises. In Miami, they're kind of run down. It's not.
We did that a couple times. We do Princess now. It's a lot less kids.
Yeah, we prefer either Norwegian because you can get the drink package, or Royal Caribbean. Those are the two that we like. So. There is a Princess, but it's out of Fort Lauderdale, and honestly, I never see deals on it. Like the Norwegian does military discounts all the time.
Okay.
So I like doing that.
Yeah, Princess is we don't have kids, and we like not being around a lot of kids when we go on vacation. So if you've got kids that you're taking with you, that's not the best choice. Listen,
they're trying to get me to cough up to go do the Disney cruise with. Listen, that's 6 tickets I got to get, man.
That's expensive.
Yeah. Oh, I priced it. Let's just say I need to make an extra like US 30 trade and be right on it. I was like, are you kidding me? So yeah, I don't know. We'll see. But well, listen, I'm glad everyone's getting the hang of it. I am. Like I said, for me, it's just getting easier and easier to see the stuff, and hopefully you guys are starting to see it a little easier as well. I'll tell you, I can't stress enough, man, the mindset. You got to work on the mindset, because that's honestly the biggest, that's the biggest kill. Well, I'll take it back. Risk management's the biggest killer. But, if you just ingrain in your head, whatever you're going to risk, 1, 2, 5, some people, want to risk 10, 15%, whatever it is, just make sure you're consistent with it. Absolutely, Bonnie. Absolutely. Have a good one. Enjoy. Yeah. Like I said, every time I'm in the gym, I laugh because like people will ask me, hey, what are you listening to? And I'm like, Mark Douglas. Who? Who are you listening to? I actually started, there's a new guy that I'm listening. I can't remember the one it's on, but he does a lot of, he talks about open interest and smart money. So that's actually where I started getting like the bar charts and looking to see when smart money gets into the market to open or close positions. And, that's when I'm going to start getting into the market. So awesome. Well, if you guys got nothing else, I'm going to hit the sack, and, I'll be up in the morning. If you guys need anything, I'll be around.
Awesome. I'll probably send you some charts for the US 30.
Awesome. Yeah, man. Absolutely. Even if I'm not trading it, man, I still mark it up, and like I can't stress it enough. Like keep a good journal. Like I said, over the weekend I saw what that the buy that I was looking for. I printed it out. Monday it happened. I printed that out. I mean I didn't print it out, but I saved it, dropped it into the folder, and I labeled it so that 6-7 months down the road, I can always go back and look at it. Studying it and understanding the movements is all part of it. So awesome. Well, listen, I will see you guys later. Enjoy. And if you guys need anything, hit me up. All right. Peace out.
Thank you, Mike.